Yeah, so we're gonna have to you always pay attention to this. So let's go back to what do we do? Um, this was my original plan was just to to turn everything into um automated, the priority buy and sell signals, which is it saves me a lot of time every day. I don't have to update wave counts in the middle of a session. My job is to look for trades for everyone. Okay. And then structure a trade to see what is the right way to take the trade. Should we do a butterfly? Should we do a calendar spread? Should we do a vertical spread? You know, I do credit spreads as well, but I'm not, I don't really post them. The reason why, because some of you might not be able to put the trade on because it's a margin. You need to, it requires margin. So, selling premiums definitely helps, but at the same time, it requires margin. And some of you guys, some of, people that I know don't have enough capital to take a 18, $20,000 worth of a margin to make 400 or 500 bucks, by selling premiums. So you have to look at it this way. So they're like high theta positive trades, but they suck a lot of margin. So it all depends on a certain on every stock is gonna be different. Like if you're gonna go up to a Netflix and stuff, anything is gonna be trading in a thousand point stock, and always gonna have a much higher margin. Um, so we'll work on them. We can try something, but at the same time, I mean, if if there is a credit spread for $6,000 margin that paying you only 150 bucks, I don't think it's really worth it, to be honest. You'd just rather just take a directional bet. I mean, those are the put credit spreads are bullish spread anyways. So it depends how you do them. You can do it on both sides, buy and sell. But again, it all comes down to a margin. So I think just leave things the way they are. Just pay for the trade up front. You know exactly what debit that you're paying. All you have to adjust now that how many numbers of contracts that you want to take. That's all you have to decide. So you don't want to do flip flop between trades either. That I want to go up 5,000 on this one, then I want to go up to 3,000 in the second trade. Then I'm because well I lost money on a $3,000 trade. Now I'm gonna go back down to a $1,000 trade. Yeah, if you doing this, that's just it's not gonna help. You will never ever able to grow your account. Your risk has to be defined upfront. Okay, you can see like I run my wife's account, right? 100,000. So I will always gonna keep trades between 1,500 to a 2,000. I don't go up to a 2,500 or a $3,000 or a 3,500. I can if I wanted to open one, but I'm not gonna do it because I know if I'm gonna be wrong, I'm gonna take a big hit. I just don't. I just wanna. You just have to uh, define your risk upfront. It's the same thing right here. I just wrote it right there. Risk only 1 to 2%. You should not exceed more than 2% of your capital per any trade. That's that you if you are doing it or you're going to do it, you're playing a dangerous game. Okay, you can get lucky on few trades by going up 3% to 4% of your capital. You can do it. Okay, the signal can play out. You can definitely make a lot more money being, if the signal plays out good. But then you gonna go right back to the aggressive side, and if the signal fails, I mean, yeah, you're gonna give a chunk back. So this is very, very important. Okay. So work on risk management it's the key because anything can happen. Look at all these stocks which are just getting killed right now. Look at all the trade desk yesterday. The stock got sold that hard. The CFO left yesterday. They knew Amazon eating their lunch, but it's just a matter of like they can see the slow growth. I mean, it just the business is just literally dead after Amazon ad revenue. Like how much money that there's no Amazon is like what close to a $2.7 trillion market cap company. Spending money for them is like nothing. They can buy any ad in the world. But companies like these ones, well, they cannot. It's very, very hard to compete with the $1 trillion club. You always have to remember that. It's the same thing right now that any new company comes out, go public, say like, yeah, we make better graphic cards than NVIDIA. And now our biggest competitor is NVIDIA. Some people's gonna say like, okay, first of all, who are you? How long you been in a business? Like how many customers and chips that you have sold so far? Who's your biggest clients? You know? So these companies, Microsoft and this, and they buy their chips from NVIDIA. They know the quality and everything, right? The support and everything they get. It's the way it is. It's the nature of a business. It's Amazon has crushed a lot of um, retail stores over the years. They're the master, just bringing all these e-commerce and stuff that online and all the bricks and mortar stores. They're gone. Like Toys R Us and how many stores there used to be up in like in malls and stuff. They're all gone. Just after this Amazon just becomes so huge. So rest is again, the rule is if the price is trading above the 50 and 200, we'll go with 30 days. If the price is trading below the 50 and 200, 60 days. Why? Because if the price is below the 50, the first resistance is always going to be 50. If the price managed to close above 50, then it's going to hit the wall at 200. So then it's just a matter of like how long the price stayed below the 50 and 200, then it's going to take quite some time to clear the 200 because that's going to be a wall. You can get a false break, then the next session the price can reverse. So it's always a tricky to fight the price at that 200 mark. So it depends how it goes. Weekly, there's a long-term positioning. I know a lot of you guys buy shares. Leaps, you can do a single leap. You can do a vertical spread as well. I prefer spread because it's going to have no time decay, right? Because you can go out a year out on time. You can go a year and a half out on time, right? So if you do a vertical spread, all you gotta do is like whatever price that you're buying, just sell one against it. It's like depends how big of a spread that you want to make. You just have to sell one call against it. So this way you will have a lower cost spread instead of paying like $1,900 for a one single leap. You can cut it down to almost $1,700. You can just get, if you say like, okay, well, I wanted to go back, I want a $2,000 trade. So instead of getting one contract, you can get two contracts. Now you have two contracts with the same vertical spread, and your overall cost is $1,800, instead of holding a one single contract that will obviously have a negative, a little bit of a negative time decay as well, theta. So the vertical will keep you flat theta, and you just have the delta that you're working on. Sometimes I bump it up a little bit on leaps because it depends on a stock. You can spend $2,000 that gives you only 10 deltas. That really, I'm not gonna sit for months just to capture $10 per point. I know there's no time limit, there's no time decay, but I just try to bump it up sometimes, go like 15 or 20 point, 20 delta per trade. So sometimes you do pay a little bit more. So it all depends on a debit and what the delta is on your trade that you're gonna be holding to toward that weekly signal. It's gonna have the same stop loss. As you can know, if the price pulls back, ends up making a lower low, signal's gonna be gone. So there's a very long uh, time window for that trade to play out over time. So those are not the one you're gonna keep looking at each session, how my trade is doing, this and that. Those you're looking at one weekly bar. Okay, it's gonna have an open, it's gonna have a close, it's gonna have a high and low. Now that weekly bar can be a higher bar. Now that weekly bar can be an inside week that just not gonna go anywhere. It still literally stays range bound, or it could be a lower weekly bar. So as long as it stays above the red line, you know, the trade is good. You just gotta have to give time, and it's the same swing. It's just working on a weekly time window, but that is a very long time. Okay. Daily signal is the one that we always play, the swing trades that we do on daily charts. It's 30, 60 DTE. Hourly, if I see something, I don't really do much hourly, as you can know, because I'm always in the middle of doing things and looking at stuff. But I do grab them. If I see something, I always post on the hourly channel. If you want to scalp a point or two or three, you can definitely do that. Has the same concept as well, but all you're doing now is just fighting the hourly bar. Okay. So each session is what, 6.5 hour long. So every day you're gonna be able to see 6 bars on the chart. Signal alerts, that's where everything goes. As you all know, whatever I trade, it's all the entry, exit will be all there. So if there is no exit, it means the trade is still on the board. Okay. I don't rush, never do, never will. Um, I take time and I watch. There are some times that I'm watching Thinkorswim, what I have it here, but at the same time, I'm always on Optimize as well, that I have way different things there. So sometimes, like with what happened with the Netflix trade, like it triggered. I managed to took. I had 4 contracts, so the price ended up pushing lower. I was like, okay, I'm gonna cut two. At the same time, I went back and optimized it. Like, okay, there goes, it has the buy signal on the daily bar. I was like, okay, I'll take my chances for tomorrow, and then tomorrow, the next day, then Netflix rebound. So it's always I have two different systems working. I was like, if one fails, there's not the one on the other screen is not gonna fail the same time. So they're two different ones. So just more like a use as like a backup. So that's pretty much about it. Rest is all the daily signals right there. Like these are the ones got triggered yesterday. As you can see, ASML. ASML fired one here on this bar. Okay, now it has so it goes back the previous day low, because well, now the thing is, as you can see, the price gapped up. So now where does it close at? 422. Now this stock is trading below 50 and 200, as you can see right there. Okay, it took a flush down here with a huge gap, so it has a pretty big gap here to the upside. Now if we go off from here, I could count 5 waves from here. We can simply make a case from here. You got 1, 2, can go 3, 4, and we can go diagonal 5. So we can do this. So we can do 1, 2, 3, 4, 5. So we can just make 2, 3, 4, and 5. So now we have a 5 waves up. Now, this is gonna be a counter trend move? I mean, now we just gotta have to see if this is all of ABC, meaning you have an extended A, it means you can have a shorter C. And remember the rule, you can have corrections always going to be have, you do get a measured move as well, ABC. You can do distance travel in A, you can project it from B, that will give you a same 100% distance travel in C. You can do that as well, but most of the time, corrections always play. If you have an extended A, you have a shorter C. If you have a shorter A, you have an extended C. So it goes either way. So if this is all five and this is two, let's say, or you want to put A here or you want to put one here, really doesn't matter. Okay, a five-way move can be an A, can be a one, two, or AB. So it really doesn't matter. So you just basically what you're looking for is you're looking for a one larger swing to a one higher low, right? This is the low. This is the high. Now what you're looking for here, for this retracement right here from this high to this low, consider as a higher low swing. Now from here, what you're looking for is higher high swing over time. Okay. So how it's gonna go and how long it's gonna take? Well, it has some hurdles, as you can see right here, right? So it has to break this wall. So at the same time, we have to look, we have 17-point ATR. Yesterday was a 13-point move, only a 76% was done. It has a higher bar yesterday. The swing has turned up again. As you can see, it has three higher bars, 1, 2, and 3 off the lows, right? So the swing is up now. Set up a stop loss right there, 722 to 785. You have to calculate this. Entry is actually on this bar at 706, right? If it pulls back a little bit on Monday, okay, that would be ideal that we could consider it, you know. You just have to sit and watch. Okay. The point is that once the signal triggers on a daily bar, because the signal triggers on the closing basis. Always remember that. Always based on a close. No signal is gonna fire somewhere in the middle of a session and running bar, because you have a high, you have a low, it has an open, it has a close. The candle has to close. Then it will fire the signal. Either it's gonna be a buy or a sell. So the same concept here. So the point now is that if we're going to pull back a little bit, we need to get ourselves in the entry as close as possible to this print. Why? Because this number, wherever you're going to get yourself in, is going to define your downside risk. Because if this thing pushes here, let's say on Monday, then look at the room to the downside now. You really want to chase this? You know, so you have to be real careful. Okay, I mean, not every signal or read is going to be perfect, and that doesn't mean there's not going to be another trade out there. You know, I always try to find something as close as possible to this to the banner price. Okay, because we need to minimize our downside risk as little as possible, and then from there, whatever we can capture, we can just go from there. You know, paying higher price and then opening up that kind of a wide window to the downside. I mean, you have to calculate like, okay, well, if you want to, how many deltas, how you want to structure the trade. You want to take 100 delta trade, you're taking a 15 point risk to the downside. That's a $1,500 worth of a stop loss. You know, so you want to spend $2,000, you want to use a $1,500 worth of a stop loss, but you better make sure your reward is pretty good, you know, to the upside as well. So you got to be a little careful, not rush into every single trade. And I try not, I mean, I do get them here, there, but it's just a matter of like when I run a scan, it doesn't mean I'm just gonna pound you with left and right chart, like, hey, take this, grab that. I mean, that's a lot of risk. That's a lot of risk. And you're not running 10, 15 positions all in one shot. That's just it's so difficult to manage. Every trade is different. I mean, how we open and just it's not easy. You gotta have to, we always says less is more. So I trade enough. It's not like I hardly trade or whatever. I mean, I take trades. My average is right around like 15 trades a month. That's what my average is. I think if we take 30 days, we're talking like 15, 17, 18 trades. I mean, that's a lot of trades for 1 month if you look at them. Now define each single one of them approximately 1,500 to $2,000 per trade. That's a lot. I used to be, for all of those years, I used to be a 10 trade guy for many, many years. And I was doing actually, you know, um, I've done it for a very long time, 10, 11 trades max. Because those trades were like, most of them are like 60 days out. Some of them I throw a couple, used to do like short-term butterflies and stuff, some calendars and stuff, just to kind of like collect some time decay. So I got something working for a shorter term, but most of them are like vertical spreads, 60 days out, most of them. But I would doing like 10. That's it. Now I get to meet and you guys are like, some of these stocks I never even heard of them. Like these Oscar and these hymns and all. Like, this is crazy. Like, I don't even know these companies. I never traded them. I mean, you know what I trade, what I look for. S&P 550 index and 100 is the ones that I track the world top 50 companies. And if I don't really see something good in that 50, I will expand it to 100 index. So that will include all the 50 stocks of an S&P plus another 50 stocks with the with a little less market cap. But those top 100 stocks are the main stocks that drives and moves the market and is going to move the sector. Looking at, well, all these Spotify and all these other, like, these are all mid cap stocks. They don't that's If Spotify or if all these companies have that kind of a big market cap, they should be trading in a 100 club, not outside the club. So my focus is always on quality. I don't care about quantity or you know trade is a trade. It's not like I'm not gonna find any signal in 100 stocks that I have to stop looking at 100 companies and just start going into a mid cap and small cap and just pay those non-liquid ETFs. So this is one, and then this one. I want to get this one. This is a nice, very nice structure here. Nice bullish wedge pattern here. Nice demand zone. Stop loss 175. LC has a trend line resistance right there. Got 3 touch points. This trade, okay, the breakout is the trend line, as you all know. You see, got 3 touches here. So it is trading above 50 and 200. I like this setup. We'll see on Monday. I'm gonna see how we open. I hope we open flat. It closed yesterday with a bullish candle, as you can see, engulfing candle here. Not this one, this one. So it's trading above 5, trading above 50, trading above 200. So 182, this would be a very good price if we can get into this trade. And this 182, I don't mind going 183 or whatever. The current price right now is 184.87. So if we got ourselves in at 182, if we got lucky, so we're taking 5, 6, 7, like 7 points worth of a risk. Okay. So which is good. I like it. And then from there, if we can get this breakout, ATR is 5 points, right? So if we manage to play the breakout from here, that would be good. So you can buy a little bit of time. If I have to, we'll see on the trade. We can do the 30 days, we can do 40 days. Some of them are like sure, like a 40, 42 days, a lot of stocks right now. So we can do an extra couple days. It really doesn't make a big difference. But we'll see. I'm really interested in this trade. We'll see. We're gonna keep an eye on Monday open. Okay. Rest. I'm gonna go through them weekly after the session. See if anything triggered on a weekly time frame. So the last ones I've Lily got killed. These one from Thursday 21st. So these are all, I don't know what the price is right now of T-Mobile. What was that? 238. This one is at 222. Um, Invalidation on this one. 238. Now it's at 244. So the weekly signal is working good. Okay, right there from 233, somewhere around here. So you got a nice pop to the upside. You came back down. Now you're trying to make his way up. So that weekly, the weekly is still going from 233. Okay. So you have to understand one thing, that the weekly time frame, as you can see, where it went, it's a 1 weekly bar. Now that weekly bar and another bar, you will get a buy and sell on the daily time frame. But that doesn't change this signal. Just keep that thing in mind. Okay, this is 1 full week of price action right here. It's the same thing here. You got sell here, and then you got the dip right there. So that time, that was 9 days ago. It's been working its way up. I mean, if you look at this chart right there on a weekly time frame, you see like it's a nice bull wedge pattern here. I mean, there's nothing bearish here. I mean, it's just like a choppy looking decline, but the point is like it's 238. The buy price was 234. So you're talking about 4 points. Then this is your downside risk, of course. And if you pay 240 or whatever, that as soon as I post it, depends. You just gotta have to sit and watch the session to see how the next session opens. If you got yourself in somewhere around here, and if you just if the stock got a push to the upside, it doesn't look like that it broke the trend line yet. It eventually, that's the key breakout for this weekly trade to play out. He just wants to get out of this channel. So we'll see how far it goes, you know. So, but the time frame is huge, You just have to keep that thing in mind. McDonald's was what 9 days ago, same thing. I know it got a bit of a pop right there on earnings, but this is good on a weekly. I don't think McDonald 294 with a 290. Let me see. Yeah, went up to 310, 311 after earnings. Oh man, that's an ugly three. Ugh. Um, and daily has a buy as well from 290 against this low, but it's very choppy, but it's holding. So it's just if you structure your trade on a one time frame, you should not be looking at any other time frame. All you're doing is like literally torturing yourself for no reason. If you structure a trade based on a weekly bar, you should be only looking at the weekly bar by the next Friday when it closes. There is absolutely no, you should be looking at a 15-minute chart or a daily chart or 100 or a half day chart or whatever time frame. You focus on only on a weekly, because you're gonna if you're going long, you're going out almost a year out on time. You just have to be patient and let the signal plays out. Market sells off, and if your stock comes down 5, 6, 7 points, well, what you should do? You should just like what, close the trade, call it off, like okay, I'm done. But your signal is not failed. Just stay in a trade and just wait to see what happens. So same thing with all these daily and hourly time frame as well. So I've done thousands of trades in the last 3 years by doing this. And what I've learned, what I've experienced is higher the time frame, better the entry, better the exit, and better the signal is. As soon as you're going to narrow the window and you start going down into this 30 minutes, 15 minutes, 5 minutes, and 1 minute, you just, I mean, you're going to get so many fail signal. It's unbelievable. I've done it. I've tried it. I've tried it with all these one contracts that I've been back testing for so long, just because I want to test it out to see how it works on a very short time frame, and I'm just going to scale the same thing up into a higher time frame and see how it goes. You know, daily is the ideal time frame, to be honest, because the thing is this: the weekly definitely sounds great, because what happens is like if you get into a trade, if the trade goes up, and then when you're going to get some sort of a pullback, nobody's happy giving back anything. You know, that's the only thing though. Nobody's happy, like, okay, well, I was up 1500. I can see that weekly still has a buy signal going. Now I got hit with a sell signal, a daily chart. Now I'm willing to give back. That's where most people say, like, you know, I'm just going to exit the trade. I'll take my money and run. So just gotta have to train yourself for that. You know, yeah, weekly signals are definitely great. They're gonna work for a very long time. But the way I look at it, the um, trade is the way we're doing right now on Google, right? We got ourselves shares and I got myself leaps. Okay. That's the best way to trade. But at the same time, not everybody has enough capital to buy shares. On top of it, do the option trading. Most people are focused on option trading, which is fine. Okay, you can do that. If you don't want to deploy that much capital, you can do this. You can just, all you're doing is you just split the trade, same amount. Let's say you want to do, you just have to decide like, okay, I want to go 20 deltas on a trade, right? So if you want to go 20 deltas on a trade, you can just simply divide this thing by 2. So how do you do that? You simply buy 10 shares when you enter a trade, and then you open another trade as a vertical spread with the 10 deltas. So you have a same 20 delta trade. All you did is just you split it in half. Now, if you have 10 shares riding along with that leap of 10, well, you know, you're in a very good shape. Because I know this thing for a fact that after a buy signal, there's never going to be another buy. It's going to be another sell. When that sell is going to trigger, that's what everything is working behind the screen. It will trigger. It will come. When it's going to come, well, we're going to find out when it's going to trigger. That's where from here to here, the last time, is when I'm going to exit those leaps that I have. But I'm not going to sell my shares, especially on Mag 7 stocks. Just to remember that. Okay. Mag 7 stock, these are the stocks that people wants to buy any sort of a weakness they can. If you're going to get yourself some shares along with leaps or however you want to structure the trade, you can do 60-day out spread, you can do a 90-day out spread as well. Doesn't matter. What you're trying to do is you want to decide this, that how many deltas I wanted to take on a trade. You simply analyze the trade. You want to take 80 delta trade, 1 point is going to pay you $80. All right. Simply divide 40 with shares and make a 40 points wide spread on as a spread. You have a same exact thing. Yes, it's gonna suck up more capital because you buying 40 shares, whatever the price is. So the capital is there, but your risk is the same. You're still gonna use the same stop loss. If that thing is gonna trigger down here, well, you're gonna take a hit of those 80 deltas that you're carrying. Doesn't matter if it's on a shares or on a vertical spread, but it's the same thing when you're going up. So this one, Google, I was like, I always talk about Google all the time. You know that I've been talking about Google for months. This is the most cheapest Mag 7 stock. Okay, this business is a cash machine. There's no other business in the world makes money more than Google. This stock is getting close to it. This stock with PE and everything, it should be trading somewhere around like 235 to 240 price. This stock was right here. I've been screaming about it every single. So like, own it for life. Buy this. Let's buy Google. Well, I mean, we got ourselves in a pretty nice entry, that's for sure. And then we're in the trade. So what we're gonna do is that we're gonna stay in a trade. I know Ruben couldn't handle this. It's just a matter of time when we're gonna break this quadruple top. We'll see how far it goes. Whichever day I'm gonna see this, I'm gonna exit those leaps. I'm gonna book profits on those. Okay, I'm actually riding from here. I hope it comes here, all the way up here. And then I'll just leave the shares as is. Then after a sell is going to be another buy. Something, whatever is going to trigger, I don't know. Just randomly throwing out there. I'll have those shares. I know that whenever the sell is going to trigger, I'm willing to give the money back, which is fine. But I booked quite a bit as well on the way up. But in the next buy another leaps. Leave the shares the way they are because you have a much lower entry now. Don't dump those. You just keep rolling them that way. So that buy signal right there is going to have exactly the same stop loss, just like this. So now let's say that you got yourself another leaps on that buy signal. Now you're going up, right, against this, and then all of a sudden the signal fails. Keep the shares, exit those leaps. Now just wait for another buy signal. You just keep repeating the same process, but you are invested in the top company all the time. You just don't dump the shares. This way you can build a really nice position overall. I've been doing this thing for a very long time. All you gotta do just split the trade. Don't put all eggs in one basket. Like, okay, this is gonna go my way or this or the highway. Just all you gotta do just split them in half. Yes, cost wise is gonna go up, of course, because you're gonna buy shares. But you just have to decide how many deltas you want to carry. That's all it is. Shares has no time decay, right? So you have nothing to worry about it. You can own that. You can own shares for the rest of your life. Options, you're gonna go out almost a year out on them. There's no time decay either. Okay, worst case, gonna cost you $1 for a day. You're not gonna even feel it. You just let this thing work and see how far it goes. Any buy entry is just especially on Mag 7 stocks. But at the same time, when we're looking at Meta and stuff, it's not easy to buy a $750 stock either. How many shares you can buy? Look at the price of the stock. This kind of a price, like 140, 150, this is much easier to buy for a much cheaper price. You can buy a lot of shares. You think it's easy to buy a Netflix for $1,200? How many shares are you gonna buy for $1,200? So keep that thing in mind. It's just not, I mean, swing trading I do, which is we most of us will all are, do swing trading. There's few of them are looking for few quick bucks here and there. Fine, you can do that. I do it as well sometimes. If I see something on hourly that triggers, I'll swing it. But they're like very short term, like couple $100 if 2-3 candle can get a pop on the hourly basis. But something to remember, and something how you can manage. Like, look at this. The price since signal fired here on what, 410. See, the swing came down, stayed above this low. There's a lot of whipsaw, as you can see. That's the plan. That is the plan. You enter a trade. We're gonna set the number right, set the price alert right there. Just simply right click, create alert. All you're gonna do, change the price right there. Oops, I don't even know what the price is. Go to a $sign here, tag them on the bottom, right click, create alert, get the print of 143.90. Oops. And create. That's it. It can sit there forever. You got yourself in here. This low has to hold. If you have a price that's going to come right below this 143.90, and it was going to get a bit of a bounce, as this thing will be gone. Not the same day, the next day. The system update every at the open, because everything is based on the close. So new signal pops and the close. I don't know how many signal got fired yesterday session. I don't know that, but I'm gonna see it on Monday, because those were the closing candles. So the same thing, when a sell or a buy will fail, it will stay there on the screen. But now you can see the price is here. But then the next morning, as soon as the bell opens, this will be disappeared. So you just basically go right back to the previous sell signal that is coming down, meaning that signal failed. So if that signal failed, so the next one that you're going to get a buy signal again in the next couple of days, or whenever the case is going to be, it's never an instant buy the next day or two. Keep that thing in mind. Okay, because now the price is making lower lows. It's we all know, if you are bull, higher high, higher low, bullish, higher low, lower low, bearish. That's it. That's what the swing trading is. Or wave count is the same thing. You're bullish, that's all it is. It's all you swing right there. High, higher low, higher high, higher low, higher high, higher low. You see? How do you see that? Low, you see? All of these lows that you see right there on the swing, they're higher and higher, right? You just trend, well, not here because that's where the sell comes into play. Like if you look from here to here, look at these lows against the previous swing low. Yeah, 1, 2, 3, 4. They're all higher highs. Higher low, sorry. That's the high, higher low, higher high, higher low, higher high, higher low. It's just same sequence. It's up and down, up and down. That's the trend. That's how what you call a trend. When you're coming down, same concept. Low here, lower high, lower low, lower high, lower low, lower high. You see all of these highs that you see here, they are lower highs. As soon as this price reverses, takes out the previous swing high, the trend shifts. That's all you got to pay attention to. I had those lines working on this, but I didn't. I brought them now just for you to kind of see it, kind of you to see how swings are working. I can hide them. Um, I don't want to clutter the chart. That's what my main focus is. I want to keep them clean, but my work is I'm a pretty damn clean person. I don't like mess. I cannot stand mess. Everybody knows me really well. My desk is super clean. My house is super clean either. I cannot, I don't know. I'm just raised this way. My mom I'm okay. I'm proud to have an OCD or call me whatever you want to call me, but my charts, my work, I'm a clean freak. I can't stand mess. My son I teach him the same thing every single day. You left something behind, you want to use something, put it back where it belongs. Don't lay it out anywhere on the floor or something he has a very bad habit of leaving bottles behind. He drinks a lot of water. So he's going to be sitting downstairs drinking a bottle and he never picks up a bottle. He's just going to leave the bottle there on the table. And now I'm going to go downstairs. I'm probably going to see like three different bottles. So he changed it like three different spots, but he left like three different bottles. So I'm always gonna say, like, who's gonna come pick up the bottle? I make him come down, like he's in his room. I'm gonna be downstairs. I'm gonna make him come downstairs, pick up those bottles, and put them back in a recycle bin. Same thing. I'm gonna go upstairs in his room. He's playing Xbox or something. He's gonna have one bottle here, one bottle by the bed, one bottle by the bed. And so he drinks a lot of water, which is good. But he just leaves. He never picks up bottles behind him. But just it's the same. It's the same concept. So this is coming down from the sell signal. This is going up from a buy signal. I mean, it's a simple way. Like, I don't think there's any other simple way you can trade, to be honest. So let's go. I didn't even start. I was kind of like missing a motive wave. I don't know what happened. This was a chart I was looking at. I got a few things open here. And I thought yesterday I shut off the computer. And then he wanted to, he wants to go to there's a trampoline park by our house. He wants to go over there. So I dropped him off there at 6 o'clock, and he was like, "Dad, can we go there?" I was like, "Okay, fine." He's like, "You can leave me there, and then you can come pick me up." I was like, "Okay, fine." So I took him there, and then I came back. I don't remember I left the computer. He came upstairs. We came back at 7 o'clock, and he came upstairs in his room, and he saw because I have those lights on the PC. He's like, "Dad, your PC is still running." I was like, "Really? I thought I shut it off." So I came upstairs, and then I had dinner. I was like, "Okay," and then the computer's still going, and I started working on this one. I like this. I like this wave count, and I was kind of reading about this company last night as well. Um, if you look at this, it's this is a three-wave decline. It's 333. Okay. It's a simple, it doesn't matter how you want to, you can do A, B, C like this, three down here, A, B, and C. So you can do a W, X, Y as a complex. That's fine, it's all done. From this low to this high, we can clearly count a five waves and make a case of a diagonal. So if we have a five waves up, this is another complex, ABC down, W, ABC, X, and then ABC down in C. Now you remember the rule. I mean, not, I wouldn't say a rule, but you know the typical retracement of a diagonal is always going to be a prior fourth wave, okay, which is this one right there. This is exactly what the price is right now. Okay, it's kind of, as you can see, it's like getting a little choppy from the last, this entire week. See, like this is a daily, but yes, good. So you got one, two, three, four, five. So this whole week, this stock is just, price is just literally sitting and thinking, right? Right here. Should it move up? Should it come back down toward 61.8? It doesn't mean it has to hit, come and hug this one, but we just built our zone is to see like, okay, if it gets one more leg down, whatever the case is going to be, to see where the price might find support here. I think it's a pretty good, nice support here. Time wise is pretty, it's almost done to this 100% relationship, right? So we had a time that was met here. Oh, this thing is black. The type indicator is on July 29th. So the time met here on this daily bar, but the price at here on August 4. Okay, so it's pretty close. July 29 to August 4 to this 100% relationship of Y versus W. So the price and time is done. It's just a matter of, that's why the price now is thinking to see if it should move from here. So I've been watching this stock this week. I don't want to pull a trigger yet, but I will because I need a buy signal here. You know, so we're doing the same thing here on a daily time frame. See, there's nothing here yet. So we're forming a bit of a demand zone here now to see what happens. But I'm gonna watch and wait um, to get a buy signal, and then we'll go long. It's pretty close. I think something's gonna trigger soon. A pretty good feeling. Right? This one is a pretty good one. So it's not a very huge mover. It's like a, as you can see, it's like moves like 3 points. So we'll see how it goes. But I will definitely do the same way. Keep that thing in mind. Stock is below 50 and 200 right now, as you can see. So we gotta buy quite a bit of time. But the only risk the stock would have is these steel tariffs and stuff. This is one of the largest steel company out of Indiana here in United States. Um, so we'll see what happens. I like eight swings, five up, three down. We could, if everything goes from here, I mean, I don't know when the buy signal is gonna trigger. If we're able to get a signal here, if we just simply take this high to this low and then project it from this low, whatever the low is, let's say if this is the low, the equal distance is at 160, like meaning a measured move. So the distance traveled here in A, you can call it 1 or A, doesn't matter, projected from the B, which is a higher low swing, right? To the higher high, which is a 100% relation, at 160. It's going to be a pretty damn good trade if it plays out. So we don't know how far it's going to go because this thing moves like a turtle with 3 points only. So it's a long way up. So we'll do the same. I'll adjust it with the half shears, half spread, you know. So if um, if the shear goes good along with the trade, and then we'll see how far the you know the spread will move. So we'll just manage it that way. So I mean that's roughly like roughly a 40% upside from here to here. It's a lot, I mean, can be a good trade if it plays out. So I'm just watching. So we just gotta wait. Cannot do anything. No buy, not buy and trade. Simple as that. We're just gonna wait. I don't even want to have this thing open here. I'm just minimizing. I probably got a bunch of wave comms open right now. SMCI is just, it's gonna take time. This company is, you see right there, this wave two, how huge it was. So this fourth wave right there has to spend a lot of time on the clock, to complete this fourth wave. So this is a larger fourth wave in play here for months since last year. And it's gonna take some time. If we take the high and a low here, it does look like a triangulation here. As you can see, A, B, C, D, and this is probably the C that we're dealing right now. If that's the case, then we still got to come down in another three more. It's going to have a little bit of a throw, which is okay. Still has the same look of a triangle. But the rule is, that E wave cannot retrace below the prior C wave low. So for the triangulation, invalidation is going to be at 2760. Well, I don't know if this is the triangle. We can make the case here. Or the other one is just goes something like this. So it really doesn't matter. And go WXY. So if that's the case, I mean, that one is going to come down a little bit more. But it's going to be shorter. If this is going to turn out to be like this, this Y wave right there is going to be shorter than the W. But this one already run its course. So it is relevant, like which way it goes, but this is your zone that you gotta watch for now. And of course, any kind of a signal that you can. I haven't traded this stock. I don't even remember the last time I even traded the stock. So that's the story on this one. I'm not. Let's take a look here on this chart to see how you look like. Oh yeah, I got a sell signal here right now. So there's nothing there yet. Yeah, sitting right there, 200. It got a bounce here. Next day, higher bar. Took another flush yesterday down back to this. Trying to break this 200 now. Yeah, I wouldn't. There's nothing here. Eli Lilly, I was looking at yesterday. That took all the pounding yesterday pretty hard. Eli Lilly is going to take a bit of a breather. Why is that? I'm going to show you why. Go back to the Eli Lilly one was down at 27. Since the $27 price, two corrections, there's only one is back here, nothing here, and this one. So now if we go with the 3 versus 1, 200 was at 747. It ended up going up to 972. Now it's down to 626. So this confirms the third wave ended. Now we're coming down in a fourth. So where do we find fourth wave retracement? How do we find fourth wave retracement? We just do 4 versus 2, which we already hugged it before. 672. Look at the low right there, 672. Check this. Oh man, it was close. I thought I already hugged it. And then from here, it looks like, yeah, right there, but it was off by like 2, 3 points. And then you gotta pin it 4 versus 3, 5, 12. So Eli Lilly got some beating, some to take a little bit more room to go. And then from here, whenever the Lilly is gonna find support, and then from there you looking at this fifth wave to the upside. It's a very clean wave count, but this is a 100% confirmed fourth wave is in play right now. And how this nightmare is gonna unfold, God knows. If we go back here to the signal screen, it took a sharp beating. Now the Eli Lilly resistance is going to be a 677. Why is that? Is you see the low right there? That's where you had a huge pop to the upside. Now it took out this pivot low. And you're going to take out the pivot low. Any sort of a bounce is going to come right back here. It's going to fail. It's going to find resistance. This broken support here will act as a resistance on the way up. I mean, I'm not saying that the it's not gonna bounce. Of course, it will eventually, but I'm not gonna touch this stock. I'm gonna sitting right there under a clear sell signal right there. So there's nothing in Lilly, but I mean, if it comes down to that $500 range, I would love to buy this stock. Keep in mind, this is the leader of the healthcare. So this company has lost a lot of market cap. I know that. Google went up yesterday, beat Amazon. Wow, impressive. Metas. Lilly went up to 17 now. 17 spot. Oh boy. Eli Lilly now worth less than 10 cent. It looks like the Chinese most valuable company is Tencent. Taiwan is TSM, I know that. Rest is all United States, then you got the Saudi Aramco here. Yeah, that's a lot of beating, man. This stock took. MasterCard getting close to Netflix. Netflix at 512. Look at Palantir. Went up to 21. Dude, this stock is, I mean, it has a nice run this year. I mean, beautiful run. There's absolutely no denial. Yeah, it's just the thing is this that rest of the companies has to go out and look for businesses, right? To sell their softwares, to get licensed, give them a support, this and this, right? This company just sits on their hand and then the money is coming from the government. So they're just getting all the government contracts left and right. They're just getting funded left and right with this government cheap money. What do they have to lose? Remember Moderna with COVID? It's a perfect example. How much money Biden pumped in Moderna? Stock just went nuts. COVID died. Look at where the stock is. I'm not saying that is gonna same thing will happen to Palantir. It can, but as long as because look at this way that defense contracts will never end because if the military dies, well, that's the end of the country. So company will definitely will benefit from it. That's it. It's just they don't really um they just have the right software with the with the with the right player. They collect all every military data is there. They have it. Costco is here. Okay, so Lily is gotta take a bit of a breather, buddy. Meta, really like this one. Zoom out a little bit. This price right there, this thing is making a some sort of a triangle. So like this. Now, if we go back to this high and this low, which was 479, the 127 extension is at 833. Okay. So it gapped up huge on earnings, came back very close to retest this, which is good, which is a very healthy sign because you always wanted to come and retest it just to make sure that there is a legit breakout. Not something like this. You see? Boom. It's like a false break. Barely made it and just like reverse, back to the downside. Yeah, you always want to break, come back, hug it, and then from there you work your way up. Because every resistance, broken resistance, act as a support to the downside, and then that support is going to get labeled, and then from there the price makes a move higher. Same thing here with the support. When you break the support right there, any bounce around this zone will act as a resistance, and then it's gonna sells back down. So it just works in reverse. So I like this one. I mean, if it can get a post, I mean, if this is a triangle, that looks to me it is, because after the massive earning pop, stock is just starting to go sideways, which is totally normal. And then from there, once if this is a triangle, we'll end up completing. Let's say if it goes like this, it's going to be the shape of it. This is an A, this is a B, this is a C, then you got the D, then you got another E. You'll have to complete this 5 sequence, A, B, C, D, and E. And then meaning the D has to stay below the B wave high and the E has to stay above the C wave low. That's what you want to make a contracting triangle. It has a very hard set rules, right? So once it completes, then we can just look for a post triangle thrust to the upside. So yeah, Meta looks good. I think Meta has a push to 800. It went pretty close. It's always like this. Okay. You're always gonna have to pay attention to this. When the price pushes up like this, I bet you that there's so many people end up buying 800 calls because they say like, okay, yeah, we're gonna get a test of 800. But look where they just stopped the price, 784. Flush at everything. Whoever bought those 800 calls, and now people will be still chasing those 800, and then just stock just goes sideways. You watch the option chain of Meta, you're going to see the most price action, the volume, the open interest is sitting at 800. Everybody chasing 800 right now because they went up, it went so close. Now it's just a matter of like, one, is this sideways chop will complete? This was right there. This move right there, it's a three-way move. Got a huge breakout. Now it's doing this. Unless if it's gonna fade the entire move, well, then it means we're wrong. As long as the sideways chop stays like this, and then we just look for a one more push to the upside called the post triangle thrust toward the 800 and 833 area. So Meta looks good and strong. Very strong name of communication. Oh, here comes Apple. Very how Apple play um finally wake up. Remember, um, we've been doing this every Saturday. Remember, I put this channel in by connecting the high to this high and to this high. Uh, this- and I left the channel here with the first initial decline. You see this throw over here? And we talked about this thing, if you remember this. And I didn't remove the channel ever since, if you notice that. I'm gonna show you that because I wanted to show you as an example how does it work. Remember the Newton third law? So now it's gonna get the same throw over. It's right here. I mean, it's already got it, but I think it has more room to run. So 3 months of a sideways. I don't think there's anybody ever think of how to label this thing like this because there's no way you can count this as a 5-way move to the upside. This is a clear 3-way move. There is no one going here with a three-way move. You need five. I'll just looked at them. When I saw this, I was like, I gotta go WXY. Put Y in a triangle. There's just no other way you're gonna do it. That's the only way you can lift this thing up. So, anyways, WXY fourth wave here. 1, 2, 3, 4. Have you noticed this? Man, you guys looking some advanced Elliott here. You see this triangle within a triangle? Have you ever seen this? In a triangle, an E wave can be a triangle within a triangle. Only the E wave. Not a C, not a D, B, or A. E wave. And how often do you see that? It's a clear triangle within this E. And you get that push to the upside. Crazy how Elliott wave works. So I got a 5 here. That was the decline. And the reversal here. So where are we at? Forget about everything else now. Now we're looking up. Okay. So equal distance of 100%, meaning that the measured move from 195 to 215 projected from 201 was 223. So we cleared that. 61.8 is the external retracement from all-time high to this low. That was the low, 169. So we cleared that. This was the first zone right there, 220 and 223. Now, 3 versus 1, that is what we look for, right? 3 versus 1, 161.8 sitting at 237. And then the 200 is at 246. Okay. So it looks, do you see the direction, the price, like you see how it shoots to the upside, like how straight it is. That's the third wave. Why this is the third wave? Remember, I always told you before, it will always gonna have acceleration gaps. When you have a price that shoots to the upside, you will notice that is gonna have acceleration gap. When you notice acceleration gaps with a huge move like this, you just know right away this is the third wave coming. Is working right now on the chart. You don't have to label it. If you want to, that's fine. But if you could find like minimum, like at least like 2 of these acceleration gaps from the open, and then just price never looks back, just rips through the whole day. Yeah, that's a well-defined third wave in play. So now this third wave right there now, eventually, I mean, the signal is in. It has the invalidation of 202, which is now we're sitting at 230. We're going to move invalidation down to 215, right? So now we know that the second wave here is quite steep, right? It went all the way down to 61.8 against the 5-way move. That was a counter trend move, moved against the 5-way move, which is a trend wave, called a motive wave. And now from here, this third wave has to push. Why? Because it has to make the room for this fourth to breathe. Now that fourth is gonna take some time to run the whole course as well. Keep in mind, Apple works really, really good with fibs because of very steady stock. Okay, so I mean, is the third end here? I mean, yeah, it's possible. If that's the case, whatever it ends, we just make the case here for the fourth wave. you know? So from the fourth wave, and then we'll look for another fifth to the upside. It doesn't matter where this third ends, it will eventually end. And then when this fourth wave will come into a play, it has to breathe, but it must stay above 215 mark. Fourth wave cannot retrace below. There comes your warning. Within a range of wave one high. So that's the big no. So we'll see what it is. So if this is a third going right, there's no point for me to make any case here unless the swing turns down and we get hit with a sell signal from next, then we'll make the case of a fourth wave. Okay. And there's no point now for you to even think to make a case for a fourth wave. Okay. The only way we're gonna make a case of a fourth wave is when we're gonna see a sell signal. Then we will say like, okay, it's my time for a bit of a breather. So Apple's on his way up. Just, I mean, if you look at this, then you go back here to Google, it just looks pretty much the same way. But this one was sideways for almost 3 months and now is making his way up. And remember what I said last Saturday? See right there? Q1 and Q2. Just remember this, as long you're going to be trading, okay? Any sector, which is 11 sectors, all right here, okay, will not see 3 down quarters in a row. You should write this thing down so you will remember. Healthcare is going to pop in Q4. Just watch. It's down now for 2, and real estate, which is, this is flat. Anyways, there's nothing in real estate. So I don't know that if the rate cut is coming, which is coming next month, which is pretty much 100% confirmed, but it's a matter of like, yeah, the Fed members has to vote. So it's going to be the first cut in September. But if the market is forward looking, right, why the real estate is not moving? Same thing with small caps. Small caps are not really doing much either. So I don't know. On top of it, November is not a, September is never, doesn't never considered as a rosy month either. It is the worst month of the year since 1976. But that doesn't mean that the market maker just gonna hand it to everyone on the plate. You know, so if Apple still needs to move another 8.5% just to break even for the year, so they still got a bit of a room to go. Apple was looking good to begin with. Why? Because it has a very strong seasonality. Look at that. Very strong seasonality for this month. And it's definitely playing out for sure. Well, you have to look at this like how long this stock was sideways. Look at Microsoft, how long it was sideways as well. till it made its way up to the push to the upside. It's up 23.85% now. Look at healthcare. It's a disaster. We can change this one. Look at September. This thing is toast. So don't even think about those United Healthcare and all these Eli Lilly and stuff. Just a complete wastage of time. I mean, if a buy signal triggers on the Eli Lilly, I'm gonna swing one, but it's gonna be a very short-term trade. But no, you see, mixed bag, November. So what we're gonna do is that around October, mid and by end of October, we're gonna start buying healthcare to make the case of November and December. Just write that thing down so you will remember. I mean, we're gonna watch every week anyway, so okay, so it's like pretty much beating for 10 straight months of the year. And then we just managed to play November and December. Basically the Q4 in the last 2 months of the year. The rest is just a complete disaster. But at the same time, you have to look at this. Okay. How can you be because healthcare is a defensive sector. And you have a market that is so, I mean, it's just literally ripping to the upside. How can we play defensive? You know? So it really doesn't make any sense to go defensive when these trends are all up big time, you know? So it's a tough call to make. I mean, let's go back. What else was doing here? This way, I'm gonna come back here. So I'm gonna go back. It's Apple here, this fine. Google already in. Fine. Tesla. I'm trying to make a same case here. Go with WXY. It's the only way you can do it. I mean, um, you can go 1-2 as well, but I just need to wait. Can always change it. But we looked at this weekly signal. Remember, which fired last week, and it did played out, as you can see. Because I was looking at, look how when was the last time it triggered here? June 14 of 2024. This is the weekly bars. Just keep that in mind. So June 14th on the weekly bar, that was the last time the signal triggered. Now this signal right there is nothing like this. Okay, this is a whole different game. These ones fired on the bar. Now these ones here, as you can see, fires after 1 or 2 bars above from the low. You see, it never fires at the exact low or high bar. You see, it fires here against this low. It fires here against this low. So every stock is going to be different. This is Apple. So Apple just gives you a one previous day day low as your stop loss. Okay. Now these ones right there triggers on the bar. So you're for this signal to fail, you just need to you watch the low of the same week. So there's We'll see how far it goes. It's been a very long time this thing triggered. So it looks good. Um, I was I was looking, um, remember I was saying 3:30 break. So and we did kind of poke above it yesterday, then kind of backed off. Now we're just almost there. It's a pretty good close. We'll close at 3:30 as a matter of fact. So now it's just a matter of like, okay, if this weekly signal is still in, this is still good, it's valid, it confirmed the next higher bar. So I know everybody in the world is watching this. So you want to put it from me like this, you want to connect like this, or you want to, well, however you want to connect these. I don't know how to draw trend lines to be honest. So you want to connect this to this wick. Some people don't even do wicks. They can just go with the actual close. You want to do like this. And then if that's the case, you already got the breakout. Now, if you want to take the wicks high, then you just leave it like this. So there's 10,000 different ways you can draw lines. I don't know. I don't know how to draw a line. That's the only damn thing that I couldn't figure out in all these years. I mean, I don't know everything. I know a lot, but I just cannot figure out a line. How to draw a line on a chart? Somebody can explain it to me or teach me. I'll pay you. But it's just it's a very um, a tricky way that you can draw lines on a chart, you know? So we'll see what happens. That's a story on Tesla. Still in a See now Tesla still has the previous 2 months. Remember we looked at these before, two inside weekly months. This was the inside bar. This is an inside bar. This is still an working inside bar, but again, we have not closed yet, has it still got full month to go. And I mean, it's either this or this. So we're just gonna find out which way it breaks. So we already talked about 340, 355, 340 call, 360 call spread. We have a spread that is working. Okay. So if you notice that I did a two-tier trade on this one. I did a diagonal first, and then I closed the diagonal, but I'm gonna keep the vertical, the spread, because it has a lot more time, and we can see if we can manage to play this one out. It's a, it's a really a good way you can structure a trade. It's called a two-tier trade, meaning that if a price managed to rally, it's trying to go sideways for a while. I mean, that this time right there can be weeks, could be months, could be a quarter. Who knows? Um, I like to sell a calendar spread here on the chop, right? So you sell a calendar spread, buy a calendar spread in this zone right there. I try to do like 50% retracement, somewhere around there. And then, and you buy a vertical spread. So now the longer the price will chew per day, you're collecting the time decay because you short the call. The short call is melting every day. So you're collecting time decay. And then when the price starting to move, okay, when you see like, okay, now the price is starting to break that upside level. So the time that you collected in the calendar, a week and a half, whatever the time decay is, just close that calendar. You just book profit on that one, and then the spread that you have working will come into a play because you have an upside spread ready to go. So the upside, so by doing this, The advantage is that your vertical spread that you bought, which is out of the money because the price is around here and you bought this spread, you have negative time decay. But at the same time, you're putting a calendar here like this that is collecting you theta per day. That theta right there is going to offset all the losing time that you have on the vertical spread. Okay. So we're going to review the trade and I'll show you. I'm doing some of these little different trades for you to kind of start to get a feel for it. I want you to step up a little bit more in option trading, to be honest. Try to start trading different strategies. And I have to like slowly work you up because some of you have never traded this before. I don't want to pound you with these um uh, two-tier trades and things like this because they're like do different positions on one single stock. Something like, whoa, wait a second, what's going on here? If you don't know, you don't know. I mean, I get that. But the way I'm looking at things and what I'm looking at my chart and how I want to lay out a risk, that's the way I want to define. That's how I wanted to trade. So we're gonna work on them. I'm doing butterflies and calendar spread. I'm starting to bring. I'll bring a couple more. Slowly, slowly, you'll just like trade diagonals, spreads, butterflies, calendars, and stuff. But these are good opportunities as well that we can definitely collect some time decay kind of on a sideways chop. And then if the breakout happens, we close that job in a calendar and look and see if we can get the breakout. So we're just not losing time, we're gaining time. So this is on our advantage anyways, because if you could, I mean, look at example of Apple, same thing. Apple has been sideways for what, almost 3 months. Now it's breaking out. Here's Tesla right there, sideways for 2 months, looking damn promising that it's gonna break out. But we'll see what happens. This is the stock that is gonna get everybody into the upside and is gonna do the rug pull just to kill all those shorts and then makes a rip to the upside. Then at the same time, people will come back. They say like, okay, no, we're just coming down to take out the lows. The best ideal a smart trader would do is just to simply sit on your hand and just wait for the breakout first to confirm. You know, being in the trade to take a shot when you range bound, either you're gonna, because most people always think like, oh, it's gonna shoot up. I'm just gonna buy calls, right? Because it's Tesla and Tesla is always something going on and everybody's bullish on this stock. But at the same time, then you got that rug pull when everybody's chasing the upside. Always up, something opposite is gonna happen. So we'll see what happens. So I'm just gonna watch and looks good. As a matter of fact, now if we go back here, our weekly signal is in. Then if we go back here to the daily time frame, Go signal fired yesterday as well. This is the one I use them as a free. See right there? That one triggered here as well. So they're a little choppy as well. This one's a good one. But the previous two right there, see, the thing is this, when not you, when the price starting to consolidate, basically goes sideways, a lot of time you're gonna get a false signal because the signal is fighting that trend. It's trying to give you an entry to see that you can get the breakout. You know, a clear trend is way different than just a sideways chop. A sideways chop is brutal, man. It hurts just to sit on. Being a shareholder is fine. You can sit as long as you want. Being in an option trade, oh man, when the price goes sideways, yeah, you toast. So it looks good on daily. Weekly has my signal, which triggered last week, remember? and rotation looks good. And we just gotta, there's so many damn promising right there. So we just gotta have to see if it's gonna make its way up to the leading quadrant. Um, so that's the story on Tesla. Here's a S&P chart. I know you look, I posted this thing on a Twitter as well. I took my I take I train and I take my power naps. I have a beautiful couch next to me. Um, this is uh this is from October 2022. Yeah, October 14 low of 2022. What is here is that this is a weekly time frame. When you have an outside weekly bar with an inside weekly bar, the next week is a higher bar. This is a very kind of different, like I wouldn't say different, like a nice pattern to watch. It happens here, okay, because I scripted it, so it's gonna trigger the signal exactly on that pattern. You have an outside bar here, an inside higher bar, outside bar, inside bar, higher bar. And the last time happened here in May, outside bar, inside bar, higher bar. So this is a round number 5 for next week. So now we're in the same ball game. Outside bar, inside bar. But look at the close. Look at the close of this weekly bar. So if we go back, I mean, we can go back as far as we can. But this, see, outside bar, inside bar, higher bar. Outside bar, no, higher bar. That's okay. Outside bar here and inside, higher bar. Outside bar, inside bar, higher bar. This is the lower bar. Outside bar, inside, outside. Then it took a flush down. So it's a very little tricky back here in 2016. We're in 2025. And how you can see exactly which week this pattern was were in play. See how we find unique patterns that nobody sees them in the world. I have a very different way of looking at price. That's all. Now the question is, since 2016, we just looked at them. This signal has a 100% accuracy since 2016. Let's see what happens next week. That will be the first time that the signal will fail if we end up putting a lower bar. It has to be a higher bar for next week now for this signal to confirm and this pattern to confirm. It can be down week the following week, which is fine. But looking at the damn close yesterday, all the way there at the top, I mean, it's looking pretty. Because you have to look at this way. I was thinking that this is the last CPI report before a rate cut. So don't you think The CPI is going to be fully priced in with a fake number. How imagine that next month is a rate cut and CPI went up. How do you think that thing is going to look like? So the number is going to be fully baked in because market is fully pricing in a rate cut for next month. So we'll see how kind of a knee-jerk reaction do we get. Um, the next one, the main numbers is to watch is the PPI is is the print that we like to see. But we'll see what happens. And on top of it, we have OPEX, but we have an option expiration next week as well. So we got to be a little careful because of the way they're gonna burn all these calls, because of the option expiration everywhere. And we'll see the flow, how many options are actually expiring, and we'll just go from there. It's very so this is round number 5. 1, 2, 3, 4, and 5. So well, let's see what happens next week. Okay. Um, I don't know. I mean, we had an inside week. There's nothing really. We can do daily chart here first. So we put an outside bar, which was on July 31st. Then we put a lower bar. Look what we did this week. Monday, higher bar. Tuesday, higher bar. Wednesday, higher bar. Thursday, higher bar. Friday, higher bar. God damn, like the market is just doesn't want to give up. Same thing here. Look, all 5 days, higher bars, green candles. Every single day. 5 days in a row. All because of Apple. Microsoft haven't done anything this week. They kept Apple sideways for a reason. And look at here. So now we have an S&P Qs with the swing up, and we have the IWM and the diamonds with the swing down. How can you know how difficult it is to trade like this? Two opposite, you have small caps and you have value. To the downside, you have a mega growth and you have S&P large, the main benchmark. To the upside, they're like, it's crazy. Look at yesterday, higher bar, higher bar to the new highs, inside day, inside day. These are the most brutal days to trade, especially inside bars. Outside bar, inside bar. Look at this back and forth range the last 4 days. Then on top of it, it cannot get 3 bars from the highs, from the low, for to turn the swing up. You need 3 bars. So it has 2, 1 and 2. Then you have inside bar, doesn't count. And then you had an outside bar here that turned the swing up, but it took a full reversal back to the downside. You need 3 bars, 3 green bars. Not getting it. Same thing here. Look how exactly like inside day, outside day, inside day, 2 higher bars. Inside day, outside, inside, 2 higher bars. They're just like identical, same mess. And here, this is the week for IWM and diamonds. And look at the week here. Straight 5 up, straight 5 up. So the stocks that are in small caps and the stocks that are in value right now, they're the one getting toast. It's a very weird picture. I just watch. I mean, I'm taking risks, as you all know that, but I'm just be a little cautious because it's a very mixed read right now. This week, this melt up that that we experienced is all because of Apple. Now, if we go back to the weekly bar, every single week, sorry, every weekly bar was the inside bar. This one is the inside bar. This is an inside bar. This is an inside bar, but this is a higher bar. So what are we looking at? We're looking at a close above the 5 MA, 5 MA here, at the 5 moving average, at the 5 moving average. This is crazy. We have a butterfly open on Russell 2000. I mean, I don't know how many of you put it. I know the other, but the range I have, the butterfly, the way I set it. I mean, we don't have to hold it. I mean, on my end is up like a little over 450 right now. Yesterday I looked. We're collecting a really nice juice every single day. Time decay. I center it at no, yeah, I had a 2220. I'm doing a RUT. This is IWM, so I'm doing a RUT index. So the range is 220 down to 2100. Man, if Russell can stop anywhere between this 125 point window, you're gonna hit a jackpot. I can tell you that. It's a 125 point window. It just stops anywhere. If that butterfly closes above the 220 mark, I think I paid 5,000, a little over 5,000, which is fine. Um, the upside max loss on that 553, $5,200 that I paid is $48. That's the max you can lose on that butterfly. Meaning that the 2100, the center strike, I believe, is 2150, 2150, and 2220. All of these strikes closes in the money, meaning that all the prices went up. The most you're gonna lose on that butterfly on a one contract is $48. You just let that thing expire. That's on a $5,200 debit. If the price closes between the 220 and 22100 anywhere this month, yeah, your payout is going to be massive. So that's the structure on the butterfly. We don't have to hold it until all the way. It's dangerous to do that. But we'll see. I mean, how it goes. I mean, if it just rips through it, I mean, we'll see. So we just gotta have to watch the weekly bars to see how it. I'll manage it. Don't worry about it. So as long as I've been trading butterflies, This is my favorite strategy, to be honest, if you ask me. What is the most the my favorite strategy in the option market is butterflies. First, the name is cute. And the second thing is that it is the least amount of money that you could risk on a trade with a massive upside potential. You know? So in butterflies are like, they're not easy, just it's just a regular trade, but it's just little it's structured a little different. Um, but yeah, it just yeah, because we don't know where the price is gonna stop from 30 days from now. But I got lucky on a Russell only one time, and on BKNG or the Booking.com. Those are the only two stocks that I've got a massive payout on a butterfly. Rest, they're just, I mean, it depends how it goes, but not the actual pin. Booking.com, I've nailed the pin to the penny at the close on that Friday. I remember that. That was a $4,200 trade, I believe, $4,000, somewhere around there that I structured a butterfly um, um, for 2 weeks. It was a pretty expensive stock. It was a $4,200 risk or something. It's been a long time. Yeah, this was, and the payout on that one was 25 grand. So I got that one at the close, at the center of the butterfly, off by 1 point. I just let that thing expire. I mean, I was right at the last 3 hours I was looking at. I was like, it's gonna kind of move around up or down, up and down. It's okay, but as long as I can stay in the wing, I was like, I'll just let that thing expire. Let them close the trade over the weekend. But when I looked at the close, I was like, damn, that was a nice close. Like almost 1 point shy of the center of the body of the butterfly. I mean, that was just luck of a draw. So it's the same on Russell 2000. I did it once because Russell, the next week we have an OPEX, right? So the options expires on Thursday at the close. Okay. But then they settle on Friday at the open. That's what they get, the settlement print. So the settlement print is you get um, the S&P is called SEP, SEP. Where the heck it went? What is it? I thought I had it. Oh, it went away. Oh, right here. I'm blind, dude. So this was our last, no, um this is a settlement print for S&P is going to get on Friday at the open. This is for the Dow Jones, which is the diamonds, and DIA, the in ETF. This is the Russell 2000. Russell 2000 gets its settlement somewhere around like 10 o'clock, not at the for 5 minutes or so when all 500 stock opens in the S&P index. Then it gets the settlement print. This one gets them around like 10 o'clock or so, close to 10 o'clock when CBOE will release they're the one who's gonna put the settlement print because all the 2000 stocks has to open and then you get the print. So, so the story on this one, I'm gonna make it fast. I'm gonna waste your time. Story is like I had a butterfly centered Same thing on the Russell 2000. It was same around like close to $5,000 payout as like close to $20,000 payout. And so I knew that post day I held the trade. Everybody tells you not to hold the trade because you could gap up and you could gap down on Friday open. And that's when you get the settlement print. But you just need the print. Okay. You don't need to trade throughout the whole day because your options that you're holding were expired yesterday. Okay. But you're just waiting for the settlement print to see what you're gonna, if you have a trade open, if it's gonna close in the money, what you're gonna get paid on it times the 100. So I held the trade. I had a same butterfly. I had an upside risk that I'm the most I could lose is gonna be a $50. Okay. And the settlement print came. I was up like $1,700 or so on the trade. I was like, if I get a settlement print 20 points higher, I was like, I'm gonna give back all the $1,800 that I have on there because it's gonna go back to a loss because the number will be defined just by the print as soon as it's gonna be released. Then the trade is over, and then by noon time is gonna be settled into your account. Not at the end of the day, by noon time, same day on Friday, they'll deposit the money. So that day, market opens lower. That Friday was a sell-off at the open because of the OPEX overnight. So when I looked at Russell at the open, it gapped down. I was like, okay. And it gapped down like really close to the center of the body of the butterfly. I was like, oh boy. I was like, okay, let's see. I'm just like sitting, waiting because I went back to a CBOE website. Is there a settlement print there? No, I'm looking at this RLS because then the toss is going to update them right there. The new print is going to come up. So I was waiting for this one to show up here. It doesn't show up. Then I get into a Yahoo Finance because Yahoo Finance is really good. They update the data pretty fast. So nothing was there. Then finally around like 9:55, the CBOE put out the number. That number came. That was the body of the butterfly. I was like, wow. And then I got the print. Nothing had because the position is not moving because it stopped working since Thursday close. Now we're just waiting for the settlement print. And then that print came, and then the noon time that I saw my account jumped 20 grand. I'm like, wow. That's like, I'll take it. So that was only two times in I don't know how many years that I ever got lucky on two butterflies. One on a settlement print and one was like the actual stoppage. Yeah, butterflies are very hard to stop at the center of the butterfly, because you don't know where the price is gonna, right? How much the price is gonna move and how far it's gonna travel, and it's very difficult to predict the close. We know the high, we know the low, right? But we don't know the close. So I can structure something here between 222 and 216. And now if you're going to start, now if you break above 222, you're going to start losing money. So where do you set it? How do you set it? How much time do you get it? Oh, it takes time to learn the whole process. Butterfly is a little complicated because you have to structure the butterfly with the three different strikes, and you then have to center that thing. That then you have to adjust your delta, then your theta, then your and then the gamma is gonna come into play on the last day. That's when the that's when you get the gamma explosion. So a trade is a trade. So I look at it. Good trade, bad trade is a part of the process, part of the game. Um, this. I don't know what to update here on a wave count. I did one a few running around here. If you would ask me as much I want to put ABC and all that, whatever that we're doing, this and this, I would rather just stay focused on a bigger picture, to be honest. It just cuts to like day-to-day noise. The wave count works so well. just having a little bit of a um like I know there's people are literally dying for market for correction. Okay. They're literally dying. We should get a pullback. We should get a pullback. And it is torching every single one of us. I get that. This damn trend is this is the third wave. That's it. Gaps after gaps. We have them all. I know this fourth is gonna come into a play. When? I don't know that. We will confirm this fourth wave when we're gonna see Mag 7 weakness across the board, when we're gonna see the swing turning direction to the downside. Then I will be a little more comfortable making a case of a fourth wave. It's a tough call right now. I don't want to put myself into a corner saying like, oh, this is the top and we're starting the fourth. I don't know that. Neither do you. You just throw it out there. I hope you're gonna be right. Yeah, I don't trade hopes, you know. And if you look at this wave count, as a matter of fact, that I actually did an update yesterday, I don't get a there's one thing that I have noticed that I don't see anybody has ever like kind of, like people habit is like, oh, you were so damn wrong and this and that. I mean, I don't want to have this kind of a conversation with anyone. Well, I'm a human just like you. I make mistakes as well. I'm not a robot or something that I'm going to be right every single time. So let the market prove it to me that I was wrong. I'll accept it. Okay. But I'll have a lot more winners than the loser. I can tell you that. So time will tell. It just um yesterday I actually went over this whole thing I don't know if you saw it. Let's start off from April 4, which was right here. That was the first post that I did it. That's when we're actually had this drawdown, right? With this fake tariffs. So we got this correction. A three-wave correction is an ABC, a counter trend move against the five-way move, right? Off this bear market low of 2022. So we had a clear 1, 2, 3, 4, 5. So we had 3, we had a 5, we had another 3. Now we're getting another 5. And then once this 5 will complete, we'll have another 3 to the downside. It's just the way Elliott works. Okay. It gets one higher degree to another higher degree after every 5 waves and a 3-wave correction to the downside. To predict these corrections, to time these corrections are not going to be easy because they're very subjective. Okay. It's a lot more easier when the trend goes up to the upside. When it fails, well, we will see when we see the broad weakness across the board. Okay. So this sell-off right there came all the way down to 48.39. Okay. We have a very good wave count in our hand for a long time. Stick to it and don't be a hero. Or don't spend day and night sitting on X looking who's posting what and oh, this is the top. Oh no, correction is going to start tomorrow. It's all noise. I'm not trying to badmouth nobody. I respect every trader out there. I know everybody's trying their best, but the some of them are just too much. The ones that are too much are the ones that are the biggest pain in the ass to deal with. Okay, they will never admit if they were wrong. They were just like, nobody knows where we're going. But that's the bottom line. Just a fact. Nobody can predict 6 months from now where the market is going. But Elliott wave definitely helps. That's the beauty of the Elliott wave is as long as your wave count is labeled right from the start, from the low, your fibs will respect those levels on your way up and on the way down. No other strategy will give you that edge. That's the beauty of Elliott wave. But you gotta label the wave count right. That's the main challenge. You got to take time, you got to sit back, take a good look at it, and see where I want to start the wave count and how I want to label this wave count. And I want to see when the price comes, what are my typical retracement levels where the price needs to find support, and what are my upside projections, which are the extensions that where the price should go. Okay. So these ones, like any pullbacks, 50% typical retracement, 61 point. This is wave two. 50 to 61.8 is a typical retracement of wave two. 4 versus 2, 23.6, 4 versus 2, 23.6. This is all here. This wave count from this low has been respecting these retracement levels over and over again on any kind of a pullback. The market just resume right back up. We're doing it until this happens because we had a 5 completed waves up. After every 5 waves up, you're going to have a 3-wave correction. Could be a complex, could go like this, could go like this, not a triangle, sorry, cannot be in a second wave. It could be either a flat or it could be a complex. Either or, doesn't matter how much time it takes. Market just literally can go chop around sideways for a long period of time after running this kind of a wild run. Back to the point. So we went all the way down here to 48.39, which is the prior high of where the bear market started. So we had a support at 48.18 along with 161.8, the fib extension. That was on what? April 4th. And from April 4th, I did the next update because it's a daily wave count. You don't need to change them every single week or so because these are daily bars. It's going to take a long time to come into a play. Then from 4/4, that was June 18, I did the second update. Look where the price hit. 4835.04. Right to that 161.8. 4830. I haven't changed anything. I have this wave count for a long time. I'm just keeping them. I was like, there's nothing for me to do. I put this thing up here, same as like, here's a 5-wave reversal, like, because if this is a 3-wave, if the C wave will end here, then you have a 5 here, you have a 3 here, you should gonna have another 5. Okay. So my timing was kind of, I don't think that anybody was expecting that we're gonna have that kind of a fast V-shaped reversal. We thought like, okay, we will finally gradually kind of make our, make our way up as like normally, like price always like you going up in stairs, but you're coming down the elevator. But at the same time, as like everybody thought like, okay, yeah, we took that kind of a beating. Eventually volatility will come off and then the price will find support somewhere and work his way up. But the market just made a monster reversal back to the upside. That was a very quick and fast. Like nothing happened. What happened? What sell-off was that? Everybody was like freaking out over tariff news left and right. How like we were sitting on Sundays, like okay, what are penguins are getting tariffs left and right. Poor penguins cannot even live on the island. They have to pay money just to be live just to live there. That's how crazy it went. And then from here, we made a 5 waves up, and then the next time went up to 618. We took a low, put a 1, 2, 3. Now 3 versus 1, okay, price was at what? 61.41. That time, all-time high was 61.47, which was right there. I was like, okay, well, right there. Are we going to put a double top? Are we going to just slice through it? Are we going to make some room? So the 3 versus 162.49 off from this low. And then 200% is 65.56. These are the typical third wave targets to the upside. Now, does it has to hit 200 to the penny? It's not necessary. It can stop anywhere, but where does it stop? Well, we don't know that. The only way we will know if we would have sell signals, volatility spike, weakness in mag sevens, swing direction turns lower. Yes, you know what? Yeah, now we kind of see signs there's some selling going on across the board. Indexes are markets under pressure, VIX spikes for a couple days in a row, futures are under pressure. Okay, then you say like, okay, I can see like, okay, this is the beginning of a correction, not a one single day session. Job report came out, market puked 600, 700 points. Oh, that's it. Market top is in. Close the books. Oh, I've been calling this thing from the last 3 months. Finally, I'm right over a one single session. The market is kicking your ass for the last 3 months. Well, what that doesn't count? That's all it is. It's all noise. So to focus on this, what is working right in front of you. So we're right there, 62.49. So that was when June 18th. So June 18th and last night, I updated to the same count. This one. Now where we at? 63.89 now. This is on yesterday. I did it over the weekend. So just thinking like, I don't know what to post. Also, like I'll just give them an update on the daily wave count. So we're right. So we slice through this 3 versus 1. And now we're just, there's your 6,500 and a 200 relationship. The 127.2 extension is a 65.62, which is from this high to this low extension right there. So this is a zone that we could mark for now for as an upside. Are we gonna go there? Are we gonna set back? This is the high. Possible. I don't know that. Soon, whatever the case we could make, this fourth wave, this fourth right there, will come into a play. How fast? How soon? Well, we will find out. Okay, this third will end. It's not gonna go for up forever. You know that, and I know that. So we're just gonna leave it like this. And all we know that any risk that we're going to take by buying something up at this top, to know, to have a plan on the back of our head that we can get hit with this any week. That will be the beginning, early stages of Ford. It's not going to just get done in one single week. Keep that thing in mind either. No fourth wave is going to last one single week. Not after this kind of a run. It could go sideways. That is totally possible. And then make a way move up to complete this one. But everybody wants a 5% correction. We haven't had them. Okay. But you have to look at the data as well. You know, you have to look at the data as well. S&P is up what? At the close yesterday, 8.63. Now take 8.63 minus 5, put an S&P at 3.63%. That's I'm counting exactly 5 to the penny. So what kind of a bull run is that the S&P is sitting with 2% or 3% year to date? Does it make sense? Yeah, read the data. When you read the data, you can make a very good calls as well. You see what happens here in Apple? 2 down quarters. Look at the pop. No Mag 7 is gonna go down for 2 straight quarters. You see Netflix right there is a very good chance it's gonna stay flat, slightly lower by the end of the Q3 because it already ran to, it was kind of 4.62, but it was up for green for two quarters. I mean, I like Netflix. The same, it's just these bids are so wild. So damn hard to get fill on Netflix, and making like a 15 point wide spread is cost you like crazy money, and just hardly gives you any delta. I don't, if you ask me, I don't personally like trading Netflix, to be honest. It just risk to reward ratio sucks, on Netflix. Expensive stock, horrible fills, hard to get fill, and then you have to adjust delta with. I don't want to trade a $10 delta trade. What thing? I'm a newbie, just started yesterday or something, or what? I mean, I keep my trades around like 75, 100 delta plays. It's just the normal ones that I like to trade. If I'm trading a butterfly, that's a different thing. Like, okay, fine, I can stay, delta neutral, theta positive. I can do that, but not on a vertical directional bet. So Netflix goes up 20 points, so I make $200. It's okay. I mean, 200 is 200. Nothing wrong with that. Profit is profit. Nobody ever go broke taking profits. So back to this. So here we are as of yesterday. So can we get to 6,500? Well, we're gonna find out because we just went through that weekly pattern that we just gonna track now to see if you're gonna get a higher bar. If you do get a higher bar, um, Monday, yeah, I mean, price can come back down or whatever. I don't know where the close is gonna be. That was gonna be a long way out until the Friday. Was have to go through the CPI and the PPI, but having a having a new high, obviously, definitely is gonna be a higher monthly bar, you know, because right now we're still on the inside monthly bar. We haven't made a new high yet either. What I want to show you this. This is where the market is buying time. See right here? It's 4 months. Because you're looking at a monthly chart. You're down for 4 months, up for 4 months. This is just bare minimum. Your upside cannot be shorter in a magnitude and a length compared to your previous downside based on a time and price. It's the same thing we're doing here on a yearly bar. And I laid this thing down. Look what the market did in the last 2021, 22, 23. Nothing. This 2022 was this one. 2022 was the bear market right there. This low right there. So the next year came. Look. So now you have to look at this way. If the market hasn't done anything, you don't have to go that far. We can if you wanted to, but there's no point for it. You don't need 15 years of data to trade the market. You just only need 5, 6 years. This 3 years, market just didn't do anything. They just put a triple top here. Then last year, market got a big pop because it was due for a triple top breakout. This year right there, which was last year, the year before, I'm sorry, 2023, was the inside bar for the year. And look at the close to the previous year close. So you got a well-defined triple top. The market hasn't done anything from the last 3 years. Finally got the breakout. So it did for 1 year. Here we are right now for this year. Look at the hammer right now. I mean, it has not closed yet, but look how it is shaping so far. I mean, we still got months to go. So don't get too excited over it. But this is the bullish hammer right there. One of these right there. The point is this. So you have a 3 years with the triple top. How in the world somebody can explain me this, that the market will only going to go up 2 years against 3 years? How? I'll be curious. I've been doing this thing for 18 years. I've studied price that I don't think you have ever met anyone in your trading career. How? How can you be sideways for 3 years and only go up for 2 years? This market has room to run. It has to at least go up 3 years just to be bare minimum, just to meet the two side by side time window. Then we'll talk about a further upside. This guy who's sitting in the White House, don't bet against him. That's my only advice I would give you. Buy the dips. I mean, if there's gonna come, there is no dips to buy. I mean, depends on the individual stocks. You can, I mean, how? Just I wanna see like how can you be go up for 2 years when you were sitting sideways for 3 years? And market and when and we're pricing out every recession out there in the world. And look what it's doing for the next year already, but pending to close. I had a guy yesterday. What was this guy's name? Is Sean? Yeah. He says like I look at a price on a shorter time frame to give me an idea on the bigger picture. Something he wrote yesterday. I mean, I don't want to. I'm just trying to make a point. But how is I was kind of like thinking. Um, I find a lower time frame helps me confirming the high time frame. What does that mean? How can you draw a picture on a lower time frame to confirm a higher time frame? Don't you think it should be other way around? Meaning that don't you think you should be making a wave kind of weekly time frame, then you come down a daily time frame, then you come down to a half day or a 1 hour chart? Or you just gonna work from a 1 hour chart back to a daily to a weekly? I don't know. I was kind of confused just reading. I haven't wrote them back. I was like, a lower time frame doesn't help the higher time frame. It is the other way around. You want to work your way down from the bigger picture. How can you build a wave count going up from a smaller time frame? It's a very different approach. It's just, I mean, again, we're looking at a full year. Okay, so not nobody out there has a stomach to hold anything for the entire year, anyways. Yeah, the volatility, especially in the option market, is gonna hit you so hard. So, but I mean, back to our previous conversation, which is here, there's no reason for me to change this wave count at all or even touch it. Leave the way it is. The price can go. We can come back here to the live chart and where is the right here? 6209 already clear. 6504. I think we'll be off by a penny or two. It doesn't matter. But we don't know. They can. What if this thing goes to 7,000? 261.8 is 7,000. That's how far this third can stretch. Just the bottom line is that we simply don't know. So, so anybody who's dying for a correction that we just need a pullback, we need a pullback because I want to buy puts. Well, the screen is not giving us that hint to buy puts, right? I'm taking small butterfly trades, cheap debit plays, just to see if we can nail one of those. I mean, we did with IWM last week. The one we have open is the SPY. Am I just gonna close it out? I don't know. We're just gonna see on Monday, see if you're gonna have a higher bar or whatever the case is. We're just gonna either trim it down and just hold one as a lotto. That's it. So you might just get lucky in the end. I'm not gonna let that thing go to zero. Absolutely not. I mean, I know this. This is a wave count working from the penny, from the low. I mean, I don't know what else to give you. I'm I don't know how many of them out there are calling market tops and market tops. I know how to pick bottoms, and I've nailed a lot of bottoms before. You guys who's been with me for a long time knows, especially on Tesla. I've killed a lot of bottoms on Tesla. I don't really make those bold calls anymore. I don't. You never ever see me going on my on a Twitter, um, making these kind of bold statements. Oh, this is a market time. Look what I post. It's all here. The clear thing I just wrote like, okay, April 4th to June 18th, and now that's it. This is what it is. This is the pattern that we just went through. Like, okay, the hook and the history. This is a very well like unique, kind of rare pattern that you get to see after months and years after, Nothing, something doesn't repeat that often. One here, three, four, and five. I was like, okay, let's see how the fifth one goes. Interesting chart, interesting pattern, has a 100% rate accuracy. Optima guy sent me an email. So it's like, dude, how do you even find these things? I was like, I don't know, dude. I just like took a power nap and I was like, I don't know, I was just fully charged, fully pumped, ready to go. Just kind of sat down and I just like opened up. I was like, let me see what's going on here. I wrote a script and what is the I wrote a script and I was like, okay, let's see. It's gonna filter filter the whole script here. Variable one equal bar times week. Did with the outside, the variable two Equal bar type week. This in with inside meaning that you're looking for the outside bar with an inside weekly bar. So then your variable one, one and V2, which is because every time when you use in scripting, you always use variables. And then it's going to be equal to one. So if the statement is going to be true, it's going to pop up this arrow. It's going to go back all the way down to 1950. What you're looking for is the outside bar with an inside bar, and let's run the whole script across the chart. And it just keep popping up these um, uh, the arrows. That's where it is. So I highlight them. So I don't need to go that far. We just went up all the way down to 2016. I just showed you that. So we'll see what happens. So, um, I mean, back to the point, stick to a once simple wave count. Bigger time frame, lot less noise. Elliott wave is gonna work the best. Are we gonna come back and retest 6147? Well, we can, we might not. Well, I don't know when how deep the fourth wave is gonna retrace, but then I will run retracements to see if something comes down to this 6147. But in order to do that, we need this. I need to see swing turns down here. I want to see swing turns down here. Then we can start it, and then we need to look for VIX. We need to look for Mag 7. We need to see like, okay, is NVIDIA, Microsoft showing some weakness? Then to make the case, you can't just randomly pick downs, and that's difficult, dangerous way to trade in a market like this. Just assuming things. Swing is up. The direction is up. You only look up. Simple as that. The direction is down, then we'll look down. Here we are. 63.81. We closed at 63.89 yesterday. Right at 78.6. That's 78.6 right there. You know what happens. I'm not saying the price cannot reverse. Of course it can. But we're up for 5 straight days on as that's another thing as well. To keep that thing in mind. Monday we might get a little bit of action. We're up for 5 straight days. This went up to 8 before we got a lower bar. There's a 5 right there. 5 straight days. We got a lower day. Yeah, 5 is a very unique number here on time. 5 here, outside reversal bar. This went up to 6. This one up to 6. The chart is down here. I'm just looking at the number. Whenever the number, when you see the blank, that's when you had a lower bar. So if you're going to notice the one thing that the 5 is the number, see 5, 6, outside bar, sharp spike both ways. So S&P does that. See 5 down. Let's see, down bar. Yeah, 5 is a very typical number. It can go up to 6. That will be Monday. Then Tuesday is going to be a reversal day one way or another on any spike. Should be, oh, I don't know. Should be okay. I don't know if when I hold the butterfly, it's going to freaking expire on Friday. Still got 5 more days. We'll see. Let me see on Monday, see how we open and stuff. And then either we can push back a little bit just to collect a little bit more theta for another day or so. It'll be nice. Okay. No, we're just, I mean, next downside minimum target that you can look for 63.40. 63.40 is the 5 MA moving average. This is the little yellow line. This one closed right at there. This one, what is it? Yeah, this one right there at 441 as well. This is a mess, man. This is just what these two are doing against this. The story is growth. That's just a fact. And mega growth takes off, the rest is just garbage. The question is, can this happen? That's your bearish bet. That if you want to take two measured swings against this high, that's it. That's the only thing I can tell you. So you keep your finger crossed and hope that this thing plays out. So you have a high here, you have a low here of the swing. This is one right there that you're looking for, the retracement, where the price has to find retracement, and then you need to look for a simple, like two measured moves. This and this. Same thing here. This, this, and this. But this high right there better stay below this high in order to play out. So the bet that you're willing to make is on a price that is up, trend is up, above the moving averages, low volatility. I don't know. So you are, OPEX is not like some wild days anyways. They're just a bit of a whatever chop or whatever. And you thinking like, oh, we're just gonna explode or some whatever is gonna happen on a CPI or something, which I don't expect anything, to be honest. And everything is just fully baked in. So how could you make a bear case? Give me like three, 2 to 3 bullet points. It just that's how I look for like, okay, you just want to just buy ports because you hate the market. They went up so much so fast because you figure out that's the top. That top is gonna hold. You just guessing. Like, we don't. I mean, we don't guess. Yeah, I'm not guessing with my with the real money. Now, you being in a trade, well, if the direction is up, that turns against you. Okay, fine. But then if you are betting against the trend, well, that's the luck of a draw, Just I've been saying the same thing. So don't piss in it, right? That's you trying to piss in the wind. That's all it is. It's gonna splash right back on your face. Oh, very resilient market, man. It's crazy. I bet you how many people went up over this. Oh, we had an outside reversal bar. And look at that. Outside reversal bar, new highs. Outside reversal bar, new highs. Come on, man. I mean, it just, I'll give you a hint here. I don't know if it's gonna has it or not. Oops. When this sell signal is gonna come in a weekly time frame, I will give you 75% chance. I would say 75% that's gonna be Next week is going to be a lower week. See, nothing here. See this one? There you go. See? It's a perfect example right there after the sell signal on the weekly bar. These signals right there on a weekly time frame are one of a kind. One of a kind. I can tell you that. Nobody in the freaking world has that. I can guarantee you either. See right there? I'm working on a very few different things right now. I'll tell you later. When you see this red arrow right here on a weekly bar at the close, there's a very good chance that you gotta buy some puts. I would be very interested in buying and putting a hedge to the downside. It happens here, down bar. Happens here, down bar. Doesn't mean that I cannot predict this. The point is when the weekly bar closes, when the sell signal is gonna fire, you should expect the next week should be a lower week. Now the one after it and the one after, well, I don't know that part. We're gonna do just thinking 2 weeks, 3 weeks in advance. The point is from the signal when it fires, you need to look for either an up week on a buy signal, down week on the sell signal. If you take advantage of one next week move to the downside, well, that's the start. If the things get heavy and volatility and there's some more selling pressure is coming, if the volume spikes, because that's your main confirmation there anyways, if you have some action in a volume, yeah, well then, okay, well, we can expect something on the following week then. But that's just the start. Because that time right now is just markets keep trending higher and higher and higher. Look how this S&P is trailing this 5 MA from here. Look at the buy signal triggered here, right, on this bar. Look at this yellow line. Look at all the weekly closes, high and low, and the close. Look at this green band. How is it trading? This is where the reversal happened. It can trigger another one down, but it didn't. But it still ended up being an inside week. So there's a go signal right here that triggers how late that thing triggers here. That's a go signal right there. As a matter of fact, this little aqua color, I keep track of them. There's one here as well. See, buy signal, higher bar. Buy signal, higher bar. So same thing here. Sell, down week. Sell, down week. Sell, down week. We don't have them here yet. But doesn't mean it's not gonna come. But it's a very long time frame. You're dealing with a weekly bar. It just, I mean, we got them like on Tesla right there. Look how long it took from June of 24 to August 1st. And there's a go signal here as well. That Tesla's gonna freaking explode, man. Seriously, this stock ready to run. Has a weekly go signal, my signal, the other screen that we watch our toss thinkorswim has a buy signal. So what else? You see how many different multiple confirmation that you have from all sources? It means that it should go. It should run. This is already confirmed. This one tells and confirms this that once this signal fires, the next bar must be a higher bar. It can be an inside bar, which is okay, but it will not, you don't want to see another lower bar. But that doesn't mean it cannot happen. Of course it can. That's when the signal fails. But the bet that you're willing to make is the high of the previous week. That's when the signal fires to see the next week the price can get up there. That's your trade. Okay. That's what that's for. Um, I would stick to this account. We can come back down to this. I mean, I can leave it there. Well, when is gonna come into, I don't know. Can this third can go up even more? Well, what are we gonna find out? It's the same thing. What are you looking at here? Here. No, this one. I need to delete this one. This one off the low, 40, 48.35. It's the same thing. What you're looking at here on the 1 hour wavecon, 2 hour wavecon, sorry. Should change it to right there. 1, 2, 3, 4, 5. When is this 4 will start? Well, I don't know. There's no signs for it yet, but it can happen. Can we, is there some sort of a flat? We can make a case of that. It's always like this. You get the first initial push, then you get a B wave that retraces almost 90% of the A wave retracement. And then you got a full reversal back to the downside in the C wave. That's the only case that you can think of other than being that every damn thing that you look at them is bullish right now. So if you're right betting against the market, you have your finger crossed and you says like, okay, well, I hope the trade that I'm in might turn into a flat like this. There's a flat right there. A, B went all the way back up, full reversal to the downside. That's what you call a flat. So we're doing the same thing here. It's totally possible, but we don't know that. We're just gonna find out next week. Okay, let's say if this is the case, this is the high, this is the rally that we just had over Apple. It was just a sucker rally, right? Just to squeeze all the shorts. If that's the case, if this B wave stops here, it can go up a little bit like this as well. It's okay. That's how these flats work. They have to retrace, they call at least 90% of an A. And then if we just take a simple measured move, C versus A, 6181, then we can just pin this, put more as your stack right there. 78.6, 100%, 127, 161.8. We can come back under pressure toward this zone to say like, okay, yes, we can see there is some sort of a reaction that happens here. I can just build up the zone for you. There you go. C versus A, C versus B. Equal measured move. If this high holds, 6181, and then you have the C versus B, 78.6, 100, 127, 161.8, 200, and then so on and on. We can do that part, which is okay. We're just gonna leave it like this for now. Corrections are not easy to trade, so get that thing out of your head. They're very damn subjective. You know, they're so difficult to time. So that's why I take multiple confirmation from Gann, from Elliott, from signals that I have, It's just to see like, okay, and then I look at RRG, look at bigger names to see that all these stocks are showing some weakness or something, these kind of a things you have to put it all together to see like if the mega growth is going to take a hit first. Because, I think the biggest problem most people have is this. They just only focus on one chart. They just sit in and fighting S&P at itself. I think that is the number one problem. You just completely shadowed into a one single chart. Even the fact that that this is a tech driven market, in order for in order to find weakness in the market, you have to find weakness in tech. Tech leads that weakness, put pressure to an S&P because S&P has flooded with tech for 30% of the time. 30% is flooded with tech. The rest of them is all value and all the other stocks. 30%. That's when the S&P comes under pressure. It's not going to move on its own. The main driver is NASDAQ. S&P being the benchmark, still, yes, everything we measured this and that, but it's not on a driver's seat. NASDAQ 100, that company's there, which is your Mag 7. Freaking Apple, man, it's like a market anchor this week. How it ripped to the upside after being for 3 months. Well, that's what happens. You have a chart that's so damn coiled, okay, sideways, and it's gonna explode because it has wasted so much time being sideways. Look, inside month, May, June, inside month, July got the pop. Look at the fade. Look at the body of this monthly bar. And look at now. This is a prime example. When you have a chart that's coiled like this, it's gonna make a monster move in either direction once this coiled chart is gonna break. It's always like this. Longer, and the chart is gonna chop around for months, bigger the breakout is gonna be. Which direction? Well, I don't know that. That's the bet that you're gonna make. Either you're gonna be right or you're gonna be wrong. But to time the chop is the most difficult part because you don't know. You can see 2 months. Well, I don't know about the third month either because that's just become. Look at Lilly. We talked about it last week as well. Look how it cracked down. It could have go up. It could have go other way as well, but it didn't. But it's gonna be a very strong breakout in either direction. Why? Because the 3 months, one full quarter, inside bar, inside bar, inside bar. You got three of them. This is the only stock in the S&P 500 had that pattern for 3 months. That's how they coiled Lilly. They didn't even move and chopped around for 3 single months and then went on and a huge breakdown to the downside. Yeah, well, Charge has been sleeping, chopping around for 3 months. Yeah, coil charts are that's when you see a massive spike in volume and where you see a massive spike in. Let's see if we can do a measured move. Take the distance here. Okay, we'll come in close. $600. That's what I said. Remember yesterday, I was like, it's gonna hit 600. It's getting really close. That's an equal measured move. Distance travel here from 972 to 711 down to 935 is equal measured move is 603. Can it goes down? Of course it can, but that's just a bare minimum. I think it's almost there. You can do the extension, like go to the yellow to green. Yeah. I really like this one. Take the swing high and low, build a yellow zone, target the green zone. Remember I did this thing on a Tesla? Where do I here? First swing up, yellow zone, target the green zone. First swing down, yellow zone, target the green zone. Same thing here. Over and over. You just keep repeating the whole thing. First swing up, yellow zone, green zone. It went up even more higher, but the point is from yellow to green. So this swing came up, swing is up, down to yellow zone, green zone. That's the next projection for this. Got a buy signal here, got a buy signal there, got a buy here. You got this one a little choppy, then roll over. This one was okay. This one's a very nice one. This was the killer. Huh, look at that. Yeah, it doesn't have fire that often, as you can see. So that's the zone. But how are you going to get there? Well, you need to make a higher high first, meaning that the price has to break above 367. 367 breakout will take you to the yellow green zone. It's been happening over and over again. We think it's not going to happen here. It's a matter of time. It's not going to be in a straight line either. There's one thing about Tesla. Keep that thing in mind. When this sucker runs, he ain't going to give nobody a chance to get in. Tesla is always like this, a wild stock. It just needs that push, you know? Once it goes, it goes. And then people like, oh, should I buy them at 400? Well, you were sleeping at 275 or 300 price before. Now you want to pay 400. Well, you bet. We'll see how many people are going to buy them at 400. It's a volatile stock. That's the bottom line. It's not just the way the stock is trading is just crazy. So I built this nuclear sector for you. Some of this guy was asking me about some of these stocks. They're all here. I left them here and put them all in one folder. So all of these Vistra, uranium, and all this gives you exactly what the rotation is. We can always find the signals on the other chart. The only two swings are down right now is SMR and this TLN. I don't even know this stock. But look at the strength, man. Look at this. Oaklu. This sucker is like this. This thing is on a crazy run. $75 stock. If we just take one to swing here to here. Ooh, baby, almost right there. Look how it backed off. Yeah, this might runs out of gas pretty soon. Nothing here yet. I'll just wait for a surprise. Couple buys here. Okay, that's a seventh swing. Yeah, that's almost to the 85.35, 85.84. That was close. Yeah, nice big run. Just a three swing, keep making higher highs, higher lows. What's the other one is? I have them here, so anybody, this guy was asking me. This one is good. It has to hold this low. This is very small third swing against the 1 and 2. New scale. Plus the swing is down as well. You gotta watch this one. Yeah, you don't want to break, you don't want to take out the previous swing low. It's gonna be a problem. Well, this is a lot of, yeah, you want to watch this 33.63 level right there to this high. You can still keep an eye on this zone right there. It's very, very important now. Yeah, you don't want to close below this. Yeah, this the run is over then if that happens. Okay. And the other one I made, I think I made another one as well. It's gonna go. I already did this. Lily is fine. I need this. Tesla still chopping. I need to close some of this garbage. This one was minerals, I believe. Yeah, these are the minerals. So we have I can just do so we can just we have a nuclear factor here and we have a same minerals here. So ASM looks little this one looks little jeez. What's going on here? This is an ASM. This is the one that's trading, right? Wow. Oh, it's a $2 stock. Never mind. It's very steady though. Yeah, nothing recent. Oh, going up in a fifth swing. I don't know. I don't never heard of these stocks. So we have that. This Bitcoin is looking pretty promising for a breakout. We'll see what happens. This might help our MSTR. If that, if that break it looks looking ready. We take the same here. Oops. That's my channel. Last time we did the same thing here, see? You can put it here, you can put initial low. Remember, I'll do a three swing initial low, see? At the same breakout here from this buy signal. This one triggered here at this bar. It's been working out pretty good so far. So you just want to see if Bitcoin is make his way out. It happens here. Well, here comes a round number two. Two. Value up, growth is up. Here's your growth. That's your value, which is puking. I don't even know what is that. This is your. I was looking. It's okay. I really don't need it. This was those Ichimoku Cloud. Remember, I was talking about it like a month or two ago. Nothing. It's okay. Just one technical tool. That's nothing. It's not. It's beautiful. I mean, what will- I don't know. Let me see. Did you talk to mom? Huh? So, what is this? Growth value S&P. See, growth is leading right there. That's your value down 4.64, S&P 8.88, growth 13.02. They're all going year to date. It's tracking the performance. So you betting this So you're technically right now saying that this gonna happen, this gonna happen, and this gonna happen.
What's the ticker symbol for S&P 500 Growth Index Fund?
I don't know if you're gonna the different growth is IVW, IVW, and the value is IVE. I can do it here. Oops. Can do name and code. There you go. Now you have them here. IVE is a value, IVW is growth. Rest, so all the, I mean, I don't want to make fun of no one, hopeless bears out there. That's your plan if it plays out. You're simply looking for this miracle to happen. This. If this happens here, then we could start to make a case. Then we'll see what the swings and rest of the picture shows. So you're looking for roughly full 2.8%, roughly 3% drop back to 6,200 area, back to 62. Because from this close to this high that we made a full V shape, we're up like 3.86%. The highest we went from all-time high was 4.35%. So basically, market is literally trying to make a move, the room above the 6147 that is going to be our major pivot zone. Okay. Okay, what else? Hourly is here. Didn't really do with this charts. Cam the earnings for next week. I don't know anything here. EMC, who cares? Blood, circle, C, nothing. Cardinal health. Okay. Some of you guys track this one, I know. This one in Kawa. So watch these two. Nothing here. Cisco, who cares? Nothing here. Oh, JD, John Deere. Yeah. Oh man. Jesus. It's crazy. That's the one that I wanted to buy. This is what I hate myself, man. AMAT, applied material. It has earnings. God, I hate freaking earnings season, man. It's a good thing that I checked. This one. It might get toast on earnings, who knows? But this will have an earning risk for this thing to play out, which we're gonna find out on Thursday after the close. The rest is Globe. I haven't even looked at this stock in a long time. How this stock is doing? Oh, jeez. Wow. This stock has $74 right now. Yeah, it's heading to zero. Okay. How's the week went? Let's recap that and we're gonna be done. Let's go back from Monday, July 4th. Carried over what was Meta? Working profit Meta spread last Friday. Yeah, that was a Friday trade that we did at the close on Friday. Monday, it's 316. This was the close. Yeah, we did on Monday, Monday at the open. 613. Yeah, it was 20 delta. Yeah, I was just that was a 2000. I remember that. This was a $2,000 debit that I paid for this trade for to get 20 deltas. So you simply take 498 times 4, 498 times 4 is $1,992. I paid for this Meta, which was right here at 1 o'clock on Friday. I paid 498 for 750, 760 call spread. That's a 10-point wide spread. You're paying $2,000 to get 20 deltas with a positive theta. So I went really close to the money. Got the push, which is fine. 2,000 to make 550, 450 bucks. It's a good return. Take that. This is the butterfly, the cheapo fly I call. Still on. We'll see how we're gonna do this on Monday. Um 435, 436, 47. We had a six, where do we at? 637. So we'll kind of push him a little bit out of the wing. So that's that. Netflix we did on Tuesday, 360. Same thing I did, $10 widespread. This was a signal that fired, as you all know that, right? On the daily chart, I got myself in. Some of you got a little hard time getting it in. So I got in, price got a flush down, signal is gone. I was like, what the hell happened that fast? You know? I was like, it triggered on this morning based on the yesterday bar, and then today is just gone. But then the good thing that Optima, this one fired here. It was a little tricky. It happens, never know. This one, so it signal fired here on this day, which was August 4th. So I put a trade on the next day. 8:52 is time right there. And then it took this because this one has stop loss right there at the low. And now the signal is gone. I was like, okay. And then I had four and I trimmed half of it. So I took two off. So I was down like 190 bucks or so, 200 bucks or so. So like, okay, I'm gonna take two off because I don't have the buy signal there, but I will take my chances on this one to see if we get a higher bar the next day or no. I said, you gotta have to have a higher bar next day for this thing to play out. Like this one, you see, higher bar. Same thing happened here. So that's when I held those two, and then the pop. So this took a loss here. Then it will come down here because I don't close it either way. Then we did a Tesla two-tier trade. So I got calendar. So I bought a vertical 340, 360. That's the breakout zone that we're looking for. And I got two calendar at the same time. Paid 777. So 777 did buy the 300 put, sell the 300 put. So you buy the later date expiration, but you sell the shorter month, you buy the longer month. You see, it has two different expiration. Same strike though. It's 300. So what you're looking for is we need to melt, looking to melt this 300 put, okay, because it's month sooner than September. So the more and more the stock is going to chop, more and more the premium is going to melt away on the short side. So that's the calendar being in a choppy zone. And then this is the bet that if the chop is going to be done and if we're going to get the breakout, then we're going to hold this one to see how far we go. Okay. Just the two-tier trade. So then we did a Costco one. Costco played out really good. So I did Costco September 969.80. It was a 20-point wide spread, 595. Well, you have to look at this, but look at the price of the stock. So you got to pay a little bit heavy, premium for this. You're buying a nine, almost close to like $1,000 stock. So on this one, my little birdie got filled at 990. This one was 56 deltas, 1671. That's what I had him. So I got this one. Costco was a good trade. It's a very good trade. Then I held one on Costco. You see, I'm booking partial profit 4, 3, and then I'd held one. Apple, this was a lotto. It came back to life. It was dead from the earning that we did for $1.50. This was sitting up here. It's literally dead. And then it just, with this the Apple pop, it just came back to life. It was $200 trade. I gotta get 86 bucks on this one. Then I opened this one, didn't realize that after 2 days it's gonna report earnings. So I wasn't really super comfortable holding that risk. I bought a vertical, got a buy signal on it, right? So which played out on earnings, then it took a full reversal yesterday. So one of the guy, what's his our top guy with those big prints, he's the one played those calls on Twilio on this well, not Twilio, the Take Two. So I bought him at 230, 240, got filled at 356. I then had the buy stop, the stop at 221. I just canceled the trade out in 1131. Then I closed them at 1135. So I got filled at 357. I got out at 360. I was like glad, boom, done. So I closed. I was just not comfortable. I should have hold some Alato. I mean, I got a nice pop in the open that it faded right away, but you gotta just close them right away. Um, then that's the Netflix that I close from the end up being at $210 for the trade for that pop signal. So cut two before, held two, close them later. This was the last piece that I had left on Costco. This one I dumped him at 1070. That was the last 467. Costco was done. This is the new trade I opened in a CB, the chubby one. So the chubby is working. Chubb insurance is sector is looking really good. It's a lot of action here. So I don't want to swing too many, but I just did this one. Um, this one, Timo, whatever you call it. This one, um, I closed this one from 370 to 268 because I don't want to take a full risk on earnings. even the fact the stock went up, closed them at 420. Was taking a I took a loss on this one just to downsize the risk. And then the earning came out, stock popped that 370, I closed them at 420, which is okay. Well, just it could have go other way around as well, but ZS is the one played nasty, man. This was just the software names got hit so damn hard. This signal failed because of all the beating the right there. See this lower low? Yeah, there's nothing here. I just had to cut the trade. I was waiting for this pop right there. You see, like what happens is that when you had a swing down, instead of cutting it right away, which sometimes I don't do it, I give a little bit of time. I just wait for this prior swing. You see right there, and then it took another leg down. Yeah, every time you're gonna come back up, these are you. Every time you make a new low, so every time when you're gonna pop the next day, you see it's gonna become a resistance zone. Every prior swing low. So I just cut it out. I structured a really nice butterfly. Man, this is just a nasty candle. I mean, look at this ACN. Look at the stock from 400 down to 238. Look at this CRM. This is like these are the companies like AI. Like there's no software will ever exist without AI. Look at their companies. This is embarrassing. Look at Snow. These software names are getting hit hard. This was a chart of the week. The trade desk. Look at the slide. Wrong stocks, wrong names. It's just too many promises from this and stock that benefits the most. Oracle. Look at that. Because this is the guy who went to the White House and kissed the ring. This is the guy who went to the White House, kissed the ring. Whoever's gonna go and kiss the ring, his company is gonna be fine in his stock.
Mo, can you
17. Oh,
can you take a look at EA, which is making a totally different move from TTWO?
yeah. Wow. That's a false. That's nasty, man. This stop should have been here. So it triggers here. Yeah, this swing has a double bottom. Hmm. Yeah, this is good. 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 Yeah, this is a little funky read here on this signal compared to the other ones. Other ones are all clean. Same thing with sell and the buy ones. Yeah, it's a nice, definitely a very nice rebound, that's for sure. Look at that. Oh, it's too hard for me to chase it for sure.
They just launched the new NFL and college, sports game, college
Okay.
football.
Okay. Electronic arts, yeah, it's a good. Stock is definitely trending really nice. Um, Oops. I drank something. Mouth is starting to get dry. Okay. That's it. Then we open DRI, man. This looks little. We gotta watch this one. Looking a little dangerous. Well, don't want to go down here, that's for sure. So we need to see some action on Monday or Tuesday. I have, well, I bought them right there anyway, so it's not like I bought them something here. Rotation looks really good. You see, Tesla looks good, Chubby looks good, and this darn rotation looks good. I hope it doesn't. If that signal fail, this thing is gonna turn around like this. Watch, but it's a very tight risk play, that's for sure. So we'll see. This swing needs to turn around like this to break this 207, like this. That would be that would be the trade. Because right now the stock is between a 50 and 200. What I can say is this, that if the price ends up making lower low, I think this 200 test will come into a play because it's already trading below 50 since 7-11 right there. From this bar right there, you see this entire bar that closed below the 50. So it's been 7, it went up to 8, 8. So it's been below this 50 mark ever since. So we'll see. Keep an eye on it. One day we'll see what happens. And the Chubby Man job, the insurance play. What I'm trying to do is this trade is moving. Might have to eat that one out to offset this one. It's okay. Um, First swing up, down here. Now we're trying to see if we can move this thing and get up to this 273. Yeah, I'm trying to see if we can get up to this zone. 273, 275, 278. So then we got this 50 and 200 sitting right up here at the top. So this is a little bottom kind of fishing trade, that we did, what we're doing on this one. But if you look at a chart, I mean, I don't know what to make out of this, to be honest. Look from here, big spike down this. So we'll see if we can get up. I'm just looking for this push. If that rotation comes handy right there, looks beautiful. To be honest, looks really, really nice. So if this rotation plays out, and if the price can get a move up here like this, that would be the ideal move and a trade. Okay, so we'll see. We're gonna wait. We got time. That's it. Inside, and then we open MSTR yesterday. So I opened 2 yesterday, which we already looked at them before. That's it for now. I mean, and we'll deal with the rest next week. Kind of, I mean, Costco early the Facebook on Monday, and then this is still on. Netflix is done. Costco is done. So we got three there, and we got this payout on a diagonal that we're talking about. We looked at this. So this diagonal was closed, $240. So I was making $32 a day every day. It's like Tesla can dance around as long as it can. It's going to pay me $32 every single day. So collected $240 because now the price starting to push up higher. You see it went up all the way up out of 330 or so. That would have just gone even more. So I just cut that one off. So took 240 on this one. And then the spread is still working. So Tesla, Netflix, Meta, Costco, Apple Lotto came back to life. It was in and out trade quick on take two. Netflix partial loss, rest played out. Costco here, Chubby's working. Timmy, this one was lost before, then end up making some few bucks on that one. ZS is the one that failed. That's it. So we actually had a one signal fail last week. One, I would say, ZS, that we were in a trade that ended up going against us. So this one got lucky on Netflix, but rest, this one was just is all because of earnings. I would have held this whole thing, would have definitely end up will walk away with the full with the profit for sure. But at the same time, I mean, I don't know. I'm just not comfortable risking full size position on earnings. That's all. So way I am. I'm not worried about $200-300. I'll make it back really fast. Netflix, that's it. So that was the week. So it was good, decent. Not thriller, but Costco was a trade of the week. That's the only thing I can say. So let's keep pacing. That's all.
So Mo,
Yeah.
in today's discussion, Apple seems to be the one, you know, to focus for Q4. And your wave count looks very promising.
Yeah.
But yeah, can you do how to put this prediction into action? Because you have already closed the Apple Lotto play,
I know.
and we don't
Now
have
we gotta.
any Apple position. So any
Here's
leap opportunity?
here's the thing on Apple right now. So now Apple had a buy signal on such a huge candle. So it's just way down. So our risk from here to here is extremely high and big, I would say. Not high, big. And the thing is this, Apple, okay, has turned this month into an outside month now. You see right there, engulfing month. So this month, Apple had made a new low and made a new high. Engulfing candles usually don't go up too much for the rest of the month. Okay. There is a very good chance this Apple is going to start to back away from this 232 price right there. So watch this 232 print. Okay. So we'll see what happens. What I'm thinking that, I mean, I don't know. I mean, at the same time, it's a little because it was a coil chart for 3 months. When the coil chart breaks, it goes. When it goes, it's hardly going to give you any chance to get back in. The reason why being is because it's just the stock just chopped around for too long. Now it's time for the stock to run in whichever direction direction it breaks. I mean, we looking at here 232, and then we come to the wave count at 3 versus 1, 237. So what I will do is I'm gonna build a zone here. Is the zone that we're gonna watch is 237. Turn this thing into a wide, take a little smaller. There you go. So we're gonna watch this zone. Okay. But I was thinking, I don't think you're gonna rip through it. You're probably gonna chew some time. Thinking if we could if we could make a butterfly here, I think it would be ideal. Maybe something like that, the butterfly. I think I would draw a good one.
So 236 center fly, a center strike.
I have to look at the strike prices and see how much is
Your drawing is cute.
I used to draw really good. Now I think yeah, it looks okay. Doing on my yeah, with a little antennas there. There you go. So we'll see. I mean, if uh, look, the wave count 161.8 is at 237. So this extension right there is 232. So we have 232, 237. I want to watch this zone to see. I mean, I know the price went up and just it was under the sell signal here for several days. Then it just made a rebound. This was when the earnings. This is the earning candle right there. This one, and then he went to the White House. Finally kissed the ring. There you go. So he did. He has supposed to do and CLD you showed down. Okay. So yeah, let's see how what market does on Monday. I don't know. I don't want to. We'll see. Let's just watch on Monday. Just if you wanna, I mean, it's gonna change here. You can see like even hourly is just going wild. This is from. Oops. I don't use that screen. Yeah, because the settings are gonna be all gone, and this I'm gonna go back to the daily here. They have them here on a different screen. So okay, I can send you a screenshot from this. This is the same is one right. There's the same 1 hour signal is going here. Oops. Just posted here. This one. It's the same 1 hour signal that is running from TO203, which is the same one that I posted here. Oh, where the heck it went? Here. This one. Against this 20163, and it's just been going ever since. This was on August 1st on Friday. That's when this signal fired on Apple. This is the hourly signals, right? Same concept, just a smaller time frame. 1 hour, 20163 stops right there. That's low right there. So you're looking at the same concept, but you just look in the hourly bar now. So the signal fired on this bar, you buy, set your stop loss right there, and then we'll see how it goes. Now this trade right there has turned into this trade that we just looked at. Here. So just made a move, just made a move. I mean, what can we do? Massive spike in volume. So we'll see. I just want to watch this zone and see if it's going to back off a little bit. I mean, I gotta have to make this something that if it rips, the butterfly is not gonna get hurt, you know? So I can center this thing here, sell, and then buy here and buy something here. Just make a butterfly here in this zone. Can do this. The other thing we can do is that we can do a calendar, okay? And if the market, if Apple's starting to chop around in this zone, you can collect the, theta here and then just buy the spread, vertical spread for whatever, 230, something higher. Because I don't, as long as Apple chopped around sideways, I don't think Apple run is done anytime soon, to be honest. This thing can run. If this is gonna run, the market is not gonna, it's gonna lift up the entire market. You know, it's been too like sideways for a very long time. This is just breaking out from this channel as well. As you can see, it's gonna make some, I think it's gonna make some more room. And plus Apple was down for 2 quarters. Oh yeah, this thing is gonna make up for the Q3. So the thing is this, that Apple is still down 8% off the as of yesterday close. So meaning if we would bet 247, 248, give or take 248, right? That's the break even number for Apple for year to date. Think about it. Break even, 8% upside for the stock just to break even for the year to date. So we think that the price will go at least flat for the year. Well, then there is at least 8% more upside. So you can calculate upside this way as well. So if you say like, okay, the stock is going to go turn positive for the year. That's what I said. I'm gonna have to teach you guys a little bit more about how to study the data. That's why I have this for a reason. You see 8.41. Now, if the strength is coming in, it's a giant company. And if you think the stock is going to go at least bare minimum just to break even, so you just take the current price, measure 8.41% to it. That gives you the exact price. So if you're going to bet on that zone to the upside, then you will know like, okay, well, this is the number The price needs to hit where the stock is going to go flat for the year. So if you using that number in your trade, well, that's an 8% upside for you on your trade as well, times whatever however you size it. The stock was down for 2 quarters in a row. There's no other stock went down 2 straight quarters, as you can see. Okay, these two, healthcare and real estate, yeah, I mean, I will get interest, but I don't see sectors that just kind of look real wild. We can take a look at them here. Let's see. XLK has a sell on it. We looked at them last week, but it's just a matter of the price going to make a higher high or not. You know, that's the key though, you see? I don't know if this is a sucker rally, to be honest. It's just going all the way up like this. Now, if you notice, yesterday, Q's made a new high, XLK did not. You see? Don't keep that thing in mind. I have same thing on VIX as well. These are great hedges that we can hedge, put a bet on, meaning the buy here on a VIX gives you a same sell on a S&P. There's no buy here. These are mean reversion signal. We need one of these green ones. You see? Gotta pop here. Look at this one. Not too many, but nobody. The choppy is very difficult to chart VIX. You cannot do that. There's no way. Dollar, I have that. See, dollar has a sell right now with a nice buy before right there. See, now I turn to a sell. But now these ones don't have the stop losses. See, it just gives you a sell on this one, but you gotta have to assume it on the back, one of the either low of the swing or the high of the swing whenever it triggers. It's not a tradable, you know, you gotta buy those other ones. Dollar doesn't get that. This is the one that this is a Russell triggered actually buy yesterday as well, the mean reversion. Look at that. It took this leg down and now it has that mean reversion. Man, this just, I mean, I showed you 3 sideways years. This is just the second year, not even done. This is more just only a year and a half from from those previous 3 years. We just looked at them with a triple top. This market has room to run. Hate it, a lot of love it. It's your call. But you gotta buy the dips. This dude is gonna pump this market hard. I can I can see it. He's not gonna he's not gonna leave second term with the lower, call it his legacy, I guess. Okay, I gotta stop this recording.